Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Good morning and welcome, guys. Thank you for joining. How is everybody doing? Happy Friday. Thank you, guys. Let me just know, everyone, can you guys hear me? Everyone on YouTube, you guys can hear me. Everyone in Zoom, you guys can hear me. It's all good. Normally I start talking and someone can't even hear me. Okay, awesome. You guys in Zoom can hear me. Everyone on YouTube, awesome. Okay, guys, let's go. It's 6 a.m. Eastern. It's Friday, March 10. Juma Mubarak to everybody. Happy Friday, good Friday. So what we're going to do is we are going to get started with a little bit of top down, but before we go there, we're going to go to Forex Factory. We're going to explain what is today NFP, non-farm payroll. Most of you guys are aware of it, but for some traders, could be their first day trading, could be a new day, and have no idea what it is. So we just want to clear the air, get it out, just explain what it is real fast. And then what we're going to do is two charts, split screen, dual charts. Our first one will be US 30 and NASDAQ. We'll do the indices on one, and then I'll flip to the other one. The other one will be more of our commodity precious metals. So we'll do gold and oil. Today we're going to leave off some Forex pairs. I believe it's too much if we're flipping. Maybe if we have time, I'll do GBP USD on a single chart. But I think this is good enough. US 30, NASDAQ. If you're an indice trader, there's more than enough to trade in there. And then also gold. We will be looking at gold, especially for NFP. And yesterday, oil was moving really nice on our session. It was moving much better than GBP USD. So that's why we'll do that. So let's have some fun, okay? And remember, risk management, do not over leverage today. It is a Friday. Fridays are notorious for being tough days to trade, fake out Fridays, and then throw on red folder news, NFP. Could be very, very volatile. So please, guys, trade with the proper risk management. This is the day when a lot of retail traders blow up their accounts and lose lots of money. If you're on the opposite side of the move and you over leverage, I can pretty much guarantee that you will blow up your account because I've done that before many times on NFP, so I've learned my lesson. So please, guys, trade within your risk for your own personal account, okay? Now, let's go over Forex Factory and let's see what exactly what is happening in the market. So if you've been trading London, we've had lots of news coming out of London, a lot of British news. We have European news. We have some Chinese news over here. And this is the big one, okay? Not this Canadian news. I'm Canadian and we do have news, but the market doesn't care about the Canadian news. The market cares about this USD, and this will be at 8:30, so it's 6 o'clock right now. So we're going to do our top down for maybe 45 minutes, just before 7 a.m. We'll look for some trades, but this will be the big impact today and after. So USD average hourly earnings month over month, we can see that it was previous 0.3%, forecasting 0.3%. So they're forecasting a no change, just regular. So we'll see what the actual number is. Non-farm employment change, 517,000 was the previous last month, and look at what they're forecasting, 224,000. So it is a big decrease in the number. So we will see what the actual is when it comes out here. And then what we're going to look at is the unemployment rate, 3.4%, and actual forecast is 3.4%. So those are the unemployment numbers. This will be a very, very big one, these two, okay? So let's just read what it is, why traders care about this. Okay, so what is this? So it measures the percentage of total workforce that is unemployed and actively seeking employment during the previous month. So when Powell was speaking, what we saw when he was talking was there's more people applying for unemployment insurance. So that's what we got from Powell. So he's kind of hinting what's going to happen. So an actual less than forecast is good for the US currency. So actual less number is good for the US currency. That means that there's not a lot of people applying for unemployment insurance. They're working, they don't need it. So that's a healthy economy, healthy US dollar. Over here, why traders care, although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of the overall economic health because consumer spending is highly correlated with labor market conditions. Unemployment is also a major consideration for those steering the country's monetary policy. So this has to do with everything. It's if people are working, they have money, they're spending it in the economy, therefore stimulating the economy and lowering inflation, and life is good. If people don't have work and applying for unemployment insurance, they don't have money to spend in the economy, it's not good. Okay, so that's if you want to read up on it, there's a lot of information here on Forex Factory. Then we can see the numbers, like this is in the past October. We can see the last one, 3.5 was the previous. They forecasted an increase of 3.6%, but it was actual lower, so it's good, 3.4%. So that's why it's 3.4 right now is from the previous February the 3rd, and now the actual is they're keeping it the same, but we'll see what the actual number is, okay? So that's what NFP is, okay, so hopefully I cleared that up. I'm not going to go too much in depth in this, but that's just the basics. And how many of you guys, is this your first NFP? Or are some of you guys veterans and this has been maybe your every month you go through this. So if there might be someone who's new to the group and just subscribe today to the channel and maybe their first NFP. So the other thing that I can recommend and suggest is please do not over leverage. It's going to be very, very volatile, okay? So let's start off with our top-down analysis. We're going to get started with US 30. And what we're going to do is we're going to get started with the higher time frame. We're going to look, we don't want to just look at the 5 minutes. We want to look overall on the daily, how everything has been moving. Okay, number one, before I go to daily, let's check out the weekly. The weekly is very interesting. And it's going to close in 10 hours today. So this is the weekly chart. I don't know if a lot of you guys look at the weekly charts, but I always do. Okay, so we bottomed out October 3 of 2022 when we came down to 28,000. The Dow, 28,000. And when we pushed all the way up, we came over here to almost 35,000 just before the end of the year, just before Christmas time, right here, December 12, and we retrace right back down to this area around 32,700. We came back up. So you see we were on a weekly range coming back up here. Couldn't really break any more highs. So there's a lot of monthly supply up here, a lot, around 34, 35,000. And they actually pinned it right there. And just recently, the week of February, we came down bearish. There was that pullback last week coming up to almost 50% of the weekly candle. And then this week, we spiked high, but it's a lower high. Maybe they came up there to hit some pending orders this week. And we had a very volatile week with Mr. Powell speaking for 2 days back to back, testifying to the Senate and the House on Tuesday and Wednesday. And he pumped the US dollar. Not he, but his words rallied the US dollar, and that's why we've seen a decrease in the stock market and money come out of the market. And we broke last week's low, and look at where we are. We are at the low of our week right now. Like, here's the bottom wick. We're almost, if I was to do like a weekly analysis and I had the weekly low and the weekly high, a purple line, we're right there. So depending what happens today, if it drops, we could be closing down into here, and it looks like an M top, double top with a lower high. So just like if this was any other pattern, if we start to close below the neckline, maybe we'll see how far down we come today. If not, it might find some weekly support. We might be turning back up. So if you guys are going to do some homework over the weekend, I would highly recommend, if you're an index trader or any type of trader, take a peek at the weekly candle and see where it's closing, and to see where maybe we could be going in the next few weeks and the next few months. Okay, so that is the weekly, but we're not going to stay on the weekly. We're going to look at the daily. So this is the individual daily candles. You can see we were pushing down last week, March 1st, 2nd, 3rd, Friday. We had a midweek reversal where we came all the way back up. Then Monday before Powell was speaking. Then Tuesday, big drop. Wednesday, another drop, and then we came back up. Thursday, yesterday, they brought it up a little bit, but then we had that bear market coming right after we ended the call. When we ended the call yesterday, that's when the market started to push down. Every single time frame from when we ended our call, from like 10 to 11 a.m., the daily, the 4-hour, the hourly, the 30-minute, the 15-minute, the 5-minute, everything was making lower lows and just pulling back into the offers, into the supply, and keep going down. So yesterday was a good day to sell the market. Like, hopefully you sold it. The pullbacks were very small, so you got to know how to counter trade if you're countering. But if you were selling all the pullbacks yesterday, you could have made some good percentage on your account. So we will see today what we get. So we're coming off of a big bearish daily candle, and today, look, it's like an ignited candle. We barely have any momentum coming up. There's like no wick. So it opened, we broke the low of yesterday, and we continued to drop down. So how far down did we go down to? Our low, I'm going to place a purple line for our low right here. 1 second. Okay, so our low was just breaking 32,000. We came down to 31,970. And our high of the day is right up here. Okay, you can see that there's barely any top wick, so it's just pushing down. It was 32,245 as our high of the day. Okay, so if we do, which we found a bottom, and since then we've been coming up. Number one area that we might want to target is yesterday's low, which is right here, 31,166. So I'm going to place a yellow line there for yesterday's low. And then when I look from the yellow to today's low, there's a little bit of traffic to the left over here. I look at the date, November 3rd of 2022. Okay, so today is March 10, 2023. I'm looking all the way back now in November and October to see when we were in here, how the market was moving. Another critical area is where I'm going to place a yellow line is right here. There's bodies and wicks right here. I have a body, I have that wick, and I'm looking in August, but that's a good area in between, and you can see that's where the volume is currently right now, 32,000 right here, 32,075. So if we come down further today and we break our own low, which could happen, if we go down deeper further, where could we go down? So I'm going to target this area where there's a wick, a wick, a wick, and a body wick right here. Continue going across the chart. I can see that there was bodies right here. So 31,860 area. And if it continues to push down, then we might bottom out right here where there's a wick, where the market came down here and touched and went back up. It came down here and touched and went back up. Similar over here, it came multiple touches and went right back up. Here it actually closed below and we dropped below it. This area is 31,714. So what I like to do here is I like to draw a green box like right here, and just in case we come down here on the lower time frames, that green box will give us a heads up that when it came down here in the past, it bounced. It could very clearly come down here and bounce right back up. So that's good enough for downside momentum. If we really start to break this big green box today or next week, just go with your levels. Here's the next level. There's a wick, and then the bodies. And if it matches with a nice psychological number, that's even better. So 31,525, like a quarter increment move is nice, okay? So that's daily, bear daily, like if we're coming down. What happens today if we come back up to this yellow line where we are? We touch yesterday, we come up bullish a little bit. We touch yesterday's low as a resistance, but maybe we break out and then we come to our high of the day. If we're breaking out bullish, we have yesterday's big bearish candle. Where could we possibly move? Well, let's look to the left over here. Maybe we come up to here. Here I have a body and a wick, and it's 32,362. Maybe we come up there. If it continues to push bullish, we've engulfed that part of the candle. Maybe we come up a little further up to here. We got a wick, we have a wick, a little wick that broke, there's another wick. Here's a wick that was bullish engulfing right after there. So we have like side by side, body to body action. And that's a good area, 32,510, 500. And what I always do is I try and look at 50% of the body from here to there, which is right about there. And then this is where I kind of apply my supply box right there. I can see that these wicks were demand right there in the market. They were demand right there in the market. Now, 50% of that candle, this could be our supply in the market. I will get to crude. Yep, Hitachi, I will get to crude. We're going to do US 30, we'll do NASDAQ, gold, and crude. Yep, 100% we'll get there. That's why I take my time on the top downs. But it kind of prepares me for the rest of the day because the liquidity could be trading in between all of these, okay? So that's good enough for me. Right now, the volume is down here. If we do break this supply area, if we do come up, then let's just get one more yellow line, logical line where it could possibly move, maybe here. Then we've pretty much engulfed yesterday's candle. We could be coming up bullish engulfing, but here's body to body. Look at all these wicks at this yellow line. So that's a good area, okay? So that's the daily. Now, what we're going to do is we're going to dissect the daily into a lower time frame. Some traders go to 4H, some traders go to 1 hour. I personally just go to the 1 hour. You know, you're just whatever time frame you feel comfortable looking at, you can go to. It's not right or wrong, anybody. It's just you get a little bit different data because you're dissecting different time frames. So this is the hourly. We were trading yesterday. Remember, we had that big bullish push. Then this is what I was talking about. When we ended the call around 11 o'clock, right here, we ended the call. This is where it started to push down, noon, if you were watching here. This big noon candle closed below the daily and closed below hourly support right here. And once you lost that hourly support, here's your big bear candle coming down at 1 p.m. This is what I'm talking about, short pullbacks, continuing to push down. To a power hour open up, short pullback, continue to push down. RSI on every single time frame was oversold, but when there's a market pushing down, your RSI indicator doesn't really matter. That's why sometimes I don't trade specifically with that indicator because sometimes it gets you caught in trouble. You keep buying when it's oversold. I like it just for a little bit of divergence if that can help. So we look at even here. So even in the Asian session, futures market, we were continuing lower lows and lower highs. Like let's see how far down the hourly, like our RSI was down to 15 before we even like bounced. So it was extremely low. Now we're bouncing a little bit, okay? Are we gonna bounce into supply and then push right back down today with news? Okay, so far there is this hourly uptrend. I'm gonna place like a white line to see if we break it. And then some areas of where we're coming up to, some resistance on the hourly is like right about here, this area. So this wick of this candle, and if we bring it across, we grab all of those wicks. So we can see where there's some hourly rejections. Right here we got rejected. We came up again, we got rejected. We came up again, we got rejected. So if we kind of break our trend line, we might trickle down into here. Where's our good hourly support level? If we do break that, we could push down. What I like to look at is this body, like 50% of this body. And if I place like a white line like right around here to see if it can hold this area. So I'm going to place that as a white line to show hourly support right here holding the trend line. If we do break this, we maybe have a high probability of breaking our low of the day and then dropping down a little further, okay? But we do have good, we can see our low of the day is holding as hourly support. It's been respected. So let's just draw a green box right in there and we'll see if it does break in a little bit, okay? So if we do break out above here, we could come up to our high of the day, and then we have a lot of room to fill to the left. Like these are single bars just pushing down. So there's not a lot of traffic. There's not a lot of consolidation. So if we have a bullish move in the markets and we break out of here, we could very well fill a lot of these. If you don't know where we could possibly go, what I normally do is if I have no information from the yellow to the purple line, I go 50%. If I have no information, like right there, I would go just eyeball it. But if we look to the left of the chart, we can get some real information. We can get exact information. If we come back in here, we can see the last time the hourly candles were trading inside here. Again, we're November, early November, and October over here. Okay, and you got some hourly ranges. Okay, but most of us are not going to trade on the hourly. So we kind of scalp the market. So what we got to do is now break down and dissect these in a lower time frame. So some traders go to the 15. Most scalpers feel comfortable trading the 5 minutes. Some other scalpers go down to the micro minutes and even scalp in there. So this is what we had. Here is pre-London. We came up, right up. That's where we hit that daily at 2:30. Then we pushed right back down. This is London market, 3 a.m. Eastern if you were trading it. Okay, it was making some moves, but still consolidated in here. Started to break out right here, 4:30 a.m. Eastern. We broke right up to that area of supply that we just identified, and then it pushed right back down to the trend line. It is still making higher lows. We came right back up here. It is a higher high, but we pushed right back down. So right now it is lower lows. It broke the daily again, and now we're pushing down. So what I can do is I could have like a 5-minute trend line coming from right here. The white one is the hourly trend line. It's the bigger one. So this one I keep it consistent with red for 5 minutes for lower time frames. So what we could be doing, guys, is if we accumulate more volume down here and we start to break out of this supply area, that's one area we're going to look for a buy, okay? But we're going to also look for volume to close above here and retest this red box. We'll flip it to a green box. We'll see if it can pick up some bids and accumulate in there, and then maybe we'll be breaking out of here, because if we break out, then we can start to come up maybe to this daily, and if we break out further right there to 32,200, so I can have like a line right up there, and maybe then we approach our high of the day, the purple line. And then when we get to the high of the day, we will judge what happens up there. So what I like to do at every high of the day, just place a red box up there if it does come up there, just in case, to give us a heads up that it is the high of the day, and if it came up there, it could go right back down. Okay, so I'll adjust these as we get closer to 7 a.m. and we finish these, because if we're back down here, then maybe I can bring this to the daily, and then we could maybe scalp this move coming right up to this red box. And then I measure it to see how big of a move it is. If we're taking that trade, it's roughly 35 pips, 40 pips zone, but maybe up to there it's like 20 pips we can get. But if the top of the supply up there is 35, 40 pips. So I adjust these, but for now I'm just going to keep it up there, and then I'll come back and I'll fix these. Okay, but for bear side momentum, if the bears are in control and they kind of break this hourly trend line, we might come down in here and retest this trend line and continue to push down. So obviously if we break below the daily low down here, that's where we could get that big drop coming down to the next daily area. So what we're going to do is we'll look for a short position below here. And remember, sometimes they can just be an impulse break, but what we're also looking for is not just the impulse break. We want to see it break, come up for a retest here where we can flip this zone to a red. Maybe it will be ongoing supply going forward. Maybe we get some liquidity, it absorbs it there, and then we're pushing down. And when we come down through here, I have nothing on the 5 minutes, because the last time we've been down here was October and November of 2022. So we'll have to go back and get some areas down here. So what I can do is now I can go to the 1 hour and come back in here, and there it is. So if we drop, you see the hourly kind of wicks in this area right over here where they dropped. I can see where they picked up right there at 31,930. So I could have like a line right around there. That could be the first drop, and then they pick up a wick there as it drops all the way down there and picks up a wick. Sorry guys, I'm just gonna fix this chart. So you see now, I got that line from back in October, November. So if it does, like if I'm scalping the markets and like it comes down, or an impulse break down to there, it's about 40, 42 pips. But it could come down and then bounce and then try to come back up at this red line. So that's why I identify it, just to give me maybe a heads up that we need to do something there. Okay, so we just came down right now currently to the trend line, and it bounced off and continued to come up bullish. So I'm going to leave this as it is, and then I'm going to come back and I will fix it up. Okay, let's just continue going because it is almost 6:30. We need to do 3 more charts before 7 a.m. So US 30, when we're trading, will be over here on the left side, guys. Okay, so US 30 will be here. Now I'm going to do side by side NASDAQ. Okay, so we'll have NASDAQ and US 30. So you choose which index you want to trade. Some traders have a preference for NASDAQ. Some traders have preference for US 30. So I'm just trying to give you guys everything, whatever you guys trade, okay? Let's see NASDAQ on the daily. We had this M top, so a lot of monthly supply up here around 12,800. Every time we came up here, all you see is upper wicks. So you know that it's getting rejected up there. And then we kind of broke the neckline right here. It's kind of like an M pattern, broke. And this big candle right here, Tuesday, February 21, this is where we had the volume close below, and then a couple of retests come back up to about 50% of it. It pushed down for lower lows. Then last week, Tuesday, Wednesday, we had kind of the reversal in the market come back up. But Monday this week, they pinned it down, and then we had Powell speaking on Tuesday and Wednesday. I'm sure you guys remember that. Yesterday was that day where we started the call. It was bullish, but then the rest of the day it started selling off, going into the close. So this is what we're trading off of. We're coming off of a big bearish day yesterday. They opened it up and we dropped down to our low of the day, which is down here. So we broke 12,000, 11,900. So we broke that psychological 12,000 number. Our high, we're coming right up. Okay, so when we came down there, we bounced. We're coming right back up. Our high of the day is 12,009. Okay, so that's our range right now. That's what we're about, approximately 100 pip range. Okay, this will open up with more news in the market, and we'll see if we're going to come back up. So if we come up bullish now, if we break our high of the day, we have yesterday's big bearish candle. So we got work to do. Okay, this is a lot of supply in the market. So bulls are going to be driving like against the market, you know, because they're counter trading this big bearish move. But if we come up, where could we come up to? So my next logical area where I have a yellow line is right here. Yellow for the next daily area, a target, 12,065. Why? Because I have a wick that got rejected there. I have a body, a body, I have a body, a body. Here's a body, body continuation. So to me, I get a lot of historical data touching at that area. So I'm going to identify that. If we break above there and we continue to move up, here is my next logical area. NASDAQ looks a lot more cleaner, okay? You can see the body, there's a wick rejected, body, body, wick, body, body. And the area is a nice level, 12,150. And that's about just below 50% of yesterday's candle. So what I like to do down here is place the red box for supply at 50%. Like right around there. So if we do come maybe a little lower is 50%, like right there. But I'm hugging it more with the critical information. So if we do come up here, we have to understand that it could be a pullback into the supply, still holding 50% of this candle, and then they push it right back down. If we can break out of here, then maybe we're going to come up and engulf the entire candle and come up to 12,225 right up here. And then if we come up there, we flip this box green, and maybe this will turn into a demand going forward. And you can bring this like with you the rest of the day, the rest of the week. It's like a zone in the market, okay? So that's for bullish momentum. But what happens if the market reverses and we come back down and it gets rejected and we come down? Our first area that we're going to hit is 11,963. That is yesterday's low. Okay, so that is an important zone in the market. It's fresh. It's yesterday's low. We might come back down, see what happens here. And then if it breaks yesterday's low, we might have momentum to come down to our own low of the day. And if we break our own low of the day, where could we come down to? This is a big area, like right here. And look at how nice it is. Okay, look at body, body. On this day, January 31st, the end of the month, we came down there exactly and push right back up. We came down here last week, Thursday, March 2nd, came down exactly, went right back up. So what I like to do there is when I see information like this, I draw my big green demand box there. What happens today if we come down there again? Maybe we're gonna have like a triple bottom where it comes down again and the buyers are waiting down there and they pick it right back up. But if we do break below here, then you gotta look and see logical areas where it could possibly go down to. Here is where a lot of the bodies broke below there. Here's a body, body gaps, then there's a wick and a body there. So that's one area where it could impulse break, but see this candle where it impulse broke and then it went right back up. That could happen, could trap some sellers in there. So you have to be very careful when you're breaking this critical area. But then there's a bigger area from the purple coming down there. So again, look to the left of the chart and look for some bodies, look for some historical data right there. I got body, I got a body, I got some bodies below there and like a body right there. So kind of gives me another area before we come down there. Maybe it comes down, breaks, and stops at this yellow line and it's a higher low and continuing to go up, okay? So sorry guys for this top-down analysis. I know it's a lot. But I do this for myself too. It helps me understand where the markets could go. But I like to do like a thorough analysis always. So now I break it down to the hourly, and you can see yesterday when we were trading, remember 8 a.m. and Wall Street, we were moving highs, and then we tapped right up there, 12,340. That's when Yoda came on the call and told us that was kind of the upper resistance up there, and then we started breaking down at the end of the day, and then see how we closed below this critical area, and then retested it, and then we continue dropping down, and it bled all the way down to here. So now on NASDAQ, we found our bottom currently. It might be our first bottom, you know, it might come down for a double bottom, but we do have a trend line forming, an uptrend currently in the market. The overall trend is still bearish, okay? We remember from the top down, we have a lot of supply coming down, but we have a minor uptrend forming in the market right now. So let's place a white line here to represent an hourly uptrend. We know that we still have a lot of supply above us. We got a lot of work to do for bulls, but we're coming up to here. There we got rejected. There we got rejected 2 times. So we're coming up to here. We are possibly going to break now. Now you can see possibly a resistance break in the market. We're coming up strong. So if it's breaking, we're going to see, can we close above here? This candle is going to close in 24 minutes. Okay, so we're going to go into 7 a.m. If we break 50% of this body, even if we're just eyeballing it, I'm sure we can just look right there, and that's about half of it. So I place a white line right there because that's where we could come up to and then get rejected, 12,030. If I look to the left of the chart, then I can get real data. So that was just me placing 50%, but if I look to the left of the chart, look at how it kind of adds, it comes down to the white line, goes back up. Here we close below it, body to body, and so it's a pretty accurate area, even when I'm looking to all the historical data in the past. So I like that area there. So if we do come up, maybe we'll see how it reacts at that white line. If we do continue to come down and we break this support line, we could trickle down into here, but we do have to understand that when we came down here, there was a lot of demand in the market picking up all of these bids right here, hence the low of the day. Okay, so the low of the day has some good demand down there. Now we're coming up. So this is one leg down, one leg up. We might form a neckline, we might consolidate up here. We'll see where it closes because it might pull back down, and then we'll see if it can continue to respect this hourly trend line or this daily area. Maybe we'll pick up a higher low and continue to come up to this big supply zone. Okay, so let's take a look now on the lower time frame. Yeah, it's a buy right now. So if you guys are in buys, it's a beautiful buy. See how the 5 minutes are even a double bottom? It came up, rejected. Look at the support on the 5 minutes. Okay, if you draw it like a line right there, see how it held? Then we came back up here, we couldn't break. So naturally the market comes back down, exactly right down to the previous low right there. And minor break, but then bullish engulfing candle, ignited bullish candle, closing now above, and another ignited bullish candle pushing up. So you could currently be in buys, and then that's what that target is, that white line where we just looked for 50% of that in the past. Right there. See where we previously tried to break at the end of the day here, 3:30 during power hour. We came up there and got rejected. So now we're coming up with more momentum. We may tap up there. But that's a beautiful double bottom on the 5 minutes. Excellent. Okay, but if it doesn't hold and we break below here, this is where we could possibly look for maybe a potential sell in the market below here, below 50% of this candle. And maybe it comes back down and tests that low over here again on the 5 minutes. But only if volume can come down here, close below, and then push down, okay? But right now, currently bullish in the market coming up. Let's see if it can tap this white line. Maybe it's going to consolidate up here. What we can do is we can flip this zone green and see if it will trade sideways for a little bit, okay? And I'll come back and I'll adjust this charting. Okay, so we do have NASDAQ and we have US 30. US 30 is trying to make a move as well. Okay, so it's coming up from here, nice bullish engulfing candle, another bullish engulfing candle back into the supply. We're kind of breaking out of it, but also look for volume to close and continue to move up. It could come all the way up to that next daily, 32,168. Is anyone in buys right now? Are you guys buying the market right now? This is pretty good move off of here. Okay, so that is our US 30 and NASDAQ. Let me just go now. We're going to move on to look at gold. Okay, so gold, gold is going to be like a lot of, it's a favorite for everybody in NFP. Okay, so gold is it's highly correlated with the US dollar. So with our non-farm payroll unemployment news, that directly affects the US dollar. So that's why a lot of traders love to trade gold during NFP, but it could be very volatile. Sometimes it trades very nice, makes nice moves, but you do have to be careful with it. So let's analyze gold now on the daily. This was Thursday before our previous NFP. So our last NFP, first Friday of every month, was Friday, February 3rd. We were coming off a bearish engulfing candle that closed below this area, below all of these wicks, and then we had our NFP last month, and it was a very bearish day. And we pushed down on gold all the way down here. Then the following week, we retraced up to exactly 50% of NFP's move, which was 1890. We couldn't get back up to 1900. So we lost that psychological 1900. And then since then, it's been making lower lows, lower highs, lower lows, but we found a double bottom down at around 1805. We held 1800. Okay, so what we can see here clearly is there is daily support being held in this area, 1805 to about 1810. Psychologically, it's holding 1800, which is strong for bulls. And I can see right now our daily, weekly resistance is right here. Okay, so we have resistance right here. At 1855, there is daily resistance. So let's place a yellow line there, okay? Now let's find what today's high and low is. Okay, so we are currently at our high right now, which is 1837. That's today's high. We're right there. What was today's low? So just so we know, 1827. So we got a $10 range on gold, 1827 to 1837, which is 100 pip move, and that's our range currently, okay? So what is the overall move of the market? Beautiful bounce. 1, 2, 3, 4, 5, 6 days coming up, 1 week, and then we had the pullback. Powell, okay, Mr. Powell speaking Tuesday, came all the way down, brought the market back down here. But Wednesday, it's like an inverted pin bar candle where we held good support, and Thursday we came right back up. We closed right here. Today we scaled back a little bit. We held support right here. So we're above 50% of our body, which is good. So the bulls are continuing to collect bids, and we're looking to break our high of the day. And if we break, our next area we could be looking at is 1844.45. Okay, so if you're trading, let's keep an eye on this area, 1844.45. We'll place another yellow line up there. If we can get up there, we're almost engulfed Powell's speech on Tuesday, that big bearish candle. Then we may come up to 1855 today, and that's where I'm going to place our supply box. Because when we pierced out of there, it got rejected. We came up there and it got rejected. So maybe if we come up there today, we might find some resistance there, but if we do break out of here with today's momentum, if gold is bullish, beautiful double bottom forming, if we get that momentum to drive out at 1855, let's find some logical areas where we can go. Because everyone says to me, Ron, is gold going to 2000? I'm like, we got to figure out if we can break 1860 before we can get up to 2000. So we have to think logical, guys, okay? Logical moves. We're day traders. We're not investing till for the next 2 years. I buy physical gold. Did you guys anybody here buy physical gold? When gold drops down to over here, I bought some physical gold at 1600 when we dropped it back. Yeah, Lado, you guys buy? Yeah. Okay, so over here, so if we do have like an impulse breakout of here, where could we go? Well, here we came up and it got rejected at 1870. We got rejected at 1870. 1870 in the past was support. So maybe that's a good logical area. If we can break today 1860 here, we got a high probability we might get up to 1870, 1871. Then again, just go through the motions. Where's the next big area? The next big area is 50% of last NFP. This was last NFP's red candle, and there's that 50% retracement, and so that would be our next supply area. Okay, right there, 1890. So those are our levels for gold on the daily. Okay, so also bear side. Okay, that's bull side. What happens if we get rejected and it's like a lower high and we push down? So if we come back down to our low of the day, 1827, and we break, what is the next logical area we could come down to? maybe 1818. You know that level, always 1818. If you're a gold trader, you should know about this. See how 1818 was acting as resistance in the past. It came up, impulse went down, came up, impulse went down, came up, impulse went down, came up, impulse went down. Finally, we closed above it, and that's when we went. So 1818 there acted as support. This was a big red day, came down exactly to 1818 and went right back up. So that's one area. If we lose 1827, we could be looking at 1818, but before we get there, don't neglect this area as well, 1823, 24. That's one more area it could come down to, okay? And then if we break there, high probability back down to 1810 into this demand box, and then it could bounce right back up. But if you lose this demand, then the market can really drop back down to, you'll lose 1800, that psychological level, and maybe 1790. That would be 1792, 90 would be my next area, okay? So that's good enough for gold on the daily. Let's look on the 1 hour. Okay, so look at gold's move on the 1 hour. Yesterday, okay, the big drop. Sorry, Tuesday, the Powell speech. We came down here. Wednesday, we kind of came back up, but look at where we got rejected at 1823, 24, that daily area that I identified. And then we came back down. It is making higher lows, so we didn't come all the way down in here. So it is making higher lows. The bulls are in control right now. And then yesterday, 8 a.m., we had that big push on gold coming all the way up to 1836. We retraced right back down. So you can see a lot of the hourly resistance now is in this area. Okay, we got rejected right there. We got rejected right there. We got 3 rejections currently in the market right now. So this is a hourly supply zone we're in. We can see that there is momentarily a trend line that started in the Asian session and still holding from London. Okay, so we have an hourly ascending triangle still holding. So let's find where our hourly support is currently, like right here in the market. 1830, 1831 is hourly support still holding in the market. So I'm going to place a white line. So we're still respecting the trend line. We're consolidating now here. Green, red, green coming up. So if we can break and close above here, now let's look where our hourly resistance is. Where could we move up to? Maybe up to here. Okay. We've got these previous bodies right there turn to support here. Here this body closed below and then we push down. So 1842 could be our next hourly resistance coming up through there. Okay. Also one more area. Okay. I do this too for scalpers. You know, not everyone is looking for a huge long position. Some of us are just scalping 20, 30 pip moves. Right around here too. See where this big candle came down red, bounced, and then here we had a transition of a candle close. So 1839 before. So they're about 30 pip increment zones. If we can't hold here, then if we break this area of support right in here, then we look to maybe short gold below here, below this green box. Okay, below here. If we lose this hourly support, if we lose this hourly support, this is where we are going to short, look for that short down to that daily low, and we'll see if it breaks, maybe drops down to, back down to here, okay? I will come back and I will adjust these. And also what we're gonna look for gold is a possible buy above this 1837.38 area. Okay, we've tried three times now, and we've been rejected. So if we can get some volume to close above here and retest this, then we could be driving further. But 3 times, since London tried 3 a.m., got rejected. The next hour, 4 a.m., tried, rejected. We just came up now again and got rejected, okay? So let's go to the 5 minutes and let's look at it. Okay, so you see all of the rejections. We're coming up there. London got rejected, pull back down. We came back up with more momentum, couldn't break it. Then they dropped it. See the support line that broke? That would have been a nice short right here at around just 445. Came back down, we came back up, lower high, push down, still respecting this. We finally broke out of here, back up to the supply area again, and got pushed down. So we are slowly building. So if we can get up here and close above this area, we could get that bullish momentum. Okay, so that's how it's moving right now currently on the 5 minutes. 10 more minutes, 11 more minutes. Let me finish up oil, and those will be our 4 charts for today. Okay, so let's do oil now. Oil was moving really nice yesterday. Okay, so now we're getting rejected over here at $80. So they're lowering the supply on the monthly. And right here, Tuesday, we had a big bearish push down with Powell speaking. Okay, kind of the whole market reversed when he was speaking. So we've been coming down, lower lows, lower highs. Thursday was a big bullish day, came up $78 and got rejected and coming down. So we can see our daily demand areas, like right here. Here was daily demand, here was daily demand. So if I bring this box all the way across, I can see now we're making a higher low. Okay, so this move that came down at $73.75 did not come down into the green box. So that's telling me that the daily momentum is making a higher low. It's picking up the bids. So we're moving away from this green box currently. And again, now we could be coming down. Are we going to come back down and touch this area down here? Maybe if we break, we'll come back into this green box. If we cannot hold this green box, we're going to come down to maybe $71.50 right here. So yellow line. And then the next demand area is these 2 bottom wicks that came down there. That's what saved oil when it came down to $70. So $70 and strong psychological support down there. Since then, we've been making right here a higher low, and we're going to see currently today if we're going to make a higher low on gold and come back up. But right now it's coming down bearish. So let's find our high and low of the day for oil. Okay, so our high is $75.75. Oil and gold like to move with quarter increments. So for example, $75, $75.25, $75.50, $75.75, $76, 76 and a quarter, 76.50, and so on and so forth. Gold the same way, 1800, 1825, 1850, 1875, 1900. These are commodities. They do like to, and precious metals, they do like to move on quarter increment moves. I don't know why they do that, but they just do. If you're a price action trader, you'll start to pick this up. And then our daily low for oil is $74.80, around $74.75, give or take 5 cents. Now inside, okay, so this is our range. It's about a dollar range, which is 100 pips. Inside the purple to purple, do we have anything significant that we can plot? We do. Let's see. So let's find our yellow line, maybe right in here. Okay, so at these wicks getting rejected, I got a wick that got rejected right here. So I'm going to place a yellow line right there. And if we do come back up to $75.30, we'll see what happens up there. If we do break our low of the day, where could we come down to? We may see oil come down to $74.45, $74.50 right here. Okay, see where the candles transition, there was a gap. Here they got respected. Here is a perfect body to body continuation with a retest at the exact area. So that's a good area. If we cannot hold 74.50, then we have a high probability we're going to come back down to this low. If we can't hold there, then we're coming down to the green box. Bull side momentum. So what happens if oil turns around today with the NFP and crude has a nice bullish momentum? We got to come back up to obviously our high of the day, $75.75. And if we can break, we're looking at maybe coming up to 76.50, like around there. Okay, the body to body continuation, body to body, there's body bodies. This body closed below the yellow line, and then there's the retest of the yellow line and the continued push. So that's a good area. We can see historical data transacted at that area. And then if we continue to push up, one more critical area I like is right here, body, body, body. And then there's a few breakout wicks here. Impulse went down, impulse went down, impulse went down. So I can start to now identify where there is a little bit of supply in the market right there. So then I bring a red box across, okay? And that's good enough for some daily like analysis where we could come up to Let's go to the hourly and break it down a little further. Okay, so we had the big move. This is what's called hidden divergence. You know, if you're using these RSI indicators, this top and this top, you see how it's making a higher high. It is trending up, but our RSI indicator is laying flat. It's not really making any new higher highs. So that's called hidden divergence. And then finally, then the market really rotated down, but it needed maybe a catalyst. It needed Powell to step to the podium and talk. And that's what caused that move coming down. We came down, we came right back up, impulse break on the hourly, no volume closing above there. Then the next hourly candle was a bearish engulfing, retest the red zone, rejected, push down. And this is where we are right now. See how we're consolidating right inside here? So look at the hourly candles. Red, green, red, green, red, green, indecision. This is not the best trading on the hourly. So it's coiling up. It's consolidating. It will eventually break out. Who is accumulating more? That's the question. Is it an aggressive buyer or an aggressive seller? Who is accumulating more of this volume will have the momentum to redistribute it to the upside or to the downside. So this area is completely consolidating. What we can do is we can draw a trend line like from 50% of this big bearish candle, this wick to that wick, and keep it consistent, keep it coming down. That is our hourly trend line. It is showing a bear trend line from over here. It's pulling back, rejected, pulling back, rejected, pulling back, rejected, pulling back, rejected. So every time we're touching this trend line, it's getting rejected. So it is saying that the supply is coming down rather aggressive, but we still have a lot of buyers. So this is what causes this consolidated flag. And it looks like it could be a bear flag because we already have a momentum coming down, could be bear flag, and then we break down to the downside. So let's look at how this looks more on the 5 minutes, but I want you visually see here that this is an hourly supply zone that is not breaking out of here. So let me just get the top of those two impulse wicks. And then we also have a hourly support turning possibly into demand in here. And this has been for a few hours now. Okay, so this all started this area, 1 a.m. pre-London. Here's London, 4 a.m., 5 a.m., 6 a.m. And then we're going to go into 7 a.m. So let's go into the 5 minutes on oil. And you see how really tight it's trading inside here. Okay, so it's similar to gold, like a double bottom down in here, come back up. Can't break supply, can't break that trend line, push back down, higher low. We try one more time. Another double top, can't break above there. Then a big bearish candle pushing it right back down. And again, it's trying to build off the bottom here, but now it's a lower high. So what we're going to do is, if we close with volume above here, and the bulls get strong and they redistributed the volume, we're going to look for a buy, maybe to come up to the high of the day, 75, 75, and maybe push a little higher. The next daily is up there, but 5 minute scalping, there's a beautiful $76 on the dot. You see that, guys? So that's why I placed a yellow line or red line right here. See where we did come up there and got rejected, and then they took it down. So if we break the high of the day, we may have a high probability of coming back up to $76 and getting rejected there. Okay, so let's see what else we got. For if they redistribute it to the downside, if we break this area, okay, we may push down, but we also need confirmation. We don't want to just take an impulse candle. We need it to break, we need it to close below there, we need it to retest. And then we might have momentum to push down to this daily, and maybe we break the daily. And where could we go down when we break that daily? We haven't been down here for a long time, so let's check the 15-minute candle. And then we get below the yellow line, we start to get some information. Right there, $74.30. Why do I place it there? Because it's a pivot in the market right there. You can see how we retested it, went right back up here. It came below, retested it, went back down. And then the next area is right there, $74.07. Why this area? Because there's a pivot in the market. See where we came down and then went right back up. Okay, so that's giving us some ideas where we could move. Right now it's coiling up, not the best to be scalping inside here. So this is that consolidation zone. We wait for something above us, we wait for something below us, okay? So let's just put these charts together. We have 1 more minute and then it's gonna be 7 a.m. Eastern. So guys in Zoom, I'll give you guys both of these charts in one moment, 1 second. Okay, there's one chart for you guys, and then I'll give you guys the other one in 1 second. Okay, so we broke out of here on US 30. So what we do is we flip this zone green for demand. This is now 7 a.m. coming right up. Also for NASDAQ, let's flip this zone green currently. Let's see if it can build and hold here. Okay, and guys, I will give you guys these charts as well. 1 second. Okay, was the analysis clear? Was it thorough? Was it too much? I know I talked a lot, guys, and I apologize for that, but it helps me with my analysis too. Hopefully it helps you guys as well. Okay, so Zoom, you got you should see two trading view links in there. So one is the gold and oil, another one is the index. Okay, guys, so now it's 7 a.m. We have a new hourly candle. Remember, 90 minutes is the big news, okay? So the market could be waiting for our news coming up. It could be trading. We could still look for trades. But you see the white line? If you were trading NASDAQ, you see where we just broke right up to that hourly? That's why I tell you guys, like, if it's coming up there and you're in profit right here, the candle broke, closed above, and there's your ignited bar. If you bought that, you're in zero drawdown, and it came all the way up to the white line, 22 pips. Boom. Get your money, pip and dip, and get out. Because if you didn't, look, it got rejected, it came up again, got rejected, came up again, got rejected, and it came all the way back down to where you possibly bought the market right here. So that's why I use these levels. And when it comes up there, you know, I take my money, I get out, and I have a decision to make. Either I close my entire position and just close it, the entire position, or if you have time, maybe take out 50%, 60, 70, 80%, and leave the rest running 20% with a break even, okay? So if you did that in this situation, I'm just going through teaching you the different, what you can do here. You either close the whole position, get your money and get out. And when you do that, you have to have your mindset set that if it continues to break out, you got to be able to live and die with that decision, okay? So I've been through this millions of times where I take out my position there, I get my 20 pips, and then it goes up another 10, 20 pips. But I've told myself after time, I do not care. I don't care about it because I know that maybe I have the confidence that I'll come and get another trade maybe in 30 more minutes or another hour. I'll get another trade. But trading is to make some money. Like it's nice that we're charting, we all have fun together, but a lot of traders do this this is what they do for a living. So we cannot leave too much pips on the table. So you have a decision. Either close it all out and be proud, be confident with your decision. If it goes up more, don't feel bad. It's part of the game. But here, what happens if we closed it all out and then now we see it coming all back down? So I don't trade with the woulda, shoulda, couldas. You got to trade like a robot and just keep yourself mentally prepared for it. If you don't want to close your entire position, this is option 2. Close 80%, 70%, 60%, or 50%. At least you pocket some money, and if it continues to run, you have a break-even runner in the market. Unfortunately, in this situation, if you closed 80% there, you pocketed 80% of the 20 pips, but when it comes down here, if you entered anywhere here, your break-even is triggered. Oh well, you still got 80% out. The other thing is, if you're holding the trade, you know, you're holding it, then this is what can happen when we're scalping the markets. Like, we're not swing trading, okay? This is scalping zone to zone. If it comes up here, it may retrace all the way back to retest this green box. So if that happens, it happens, okay? We tried, you know, some traders go up 20 pips in profit and leave a break even and then hope for a pullback to be maybe 50% of this candle and continue to go. Sometimes they do that. Sometimes we can get into a 20 pip trade, go to a break even, then the next pullback is about 50% of this green candle and we're holding it and we're continuing to break, and then all of a sudden you're up 30 pips, 40 pips. So it does happen, but it doesn't always trade like this. So that's why as a trader you need to make a decision. You gotta be ready what the market gives you. That's why trading with a plan and it goes there, that's it. Don't worry about it. Like, if you get really caught up on the woulda, shoulda, couldas, it's really going to affect your mentality as a trader and could ruin you as a trader. And so just I don't know. I don't know how I changed my mentality, but whenever I did that, when I started doing that, I started to see my trading very like change for the better. Because I used to always get caught up. I used to always try and hold for bigger moves, 50 pips, 70, 100 pips, but I started to see scalping the markets. It can give you 20, 30, 40, but I started to see a lot of them would retrace right back to my break even. And then I was back testing, I was studying my journal, and then I started saying to myself, I'm going to be happy with 15, 20 pips moves. But then what I learned over time when I started to grow my account, or you can do a prop firm, then when you get really comfortable with doing this, you can maybe increase your lot size a little bit and take advantage of that 20 pip move. So if you do an increased lot size, you're really doubling up your pip. So if you normally trade with $1 per pip, okay, if that's your normal trading size, $1 per pip, and you make 20 pips right there, $20. But then you get really confident at doing this, maybe you can step up your lot size to $2 per pip. And then with those same 20 pips, you make $40. So you're essentially making like 40 pips. You've doubled your lot size. You're making 2x the same amount of pips. If you get really good, and you grow your account, you can go half lot and do $5 per pip, and then you make $100 for that same 20 pip move. So it's like essentially you made 100 pips, but you did it with 20 pips, and that's could be someone's daily goal. And it's just being patient and disciplined and waiting for a couple quality trades per day, and you could have your daily goal. It's just about being patient. Okay, the market will present us with hundreds of quality trades per day, but we have to distinguish which is quality and which is garbage. Okay, so that's part of our job as traders. Like right now, this is not quality volume on oil. It's just consolidating inside here. We want more quality. Okay, so we retraced right back down to the demand zone, and we got a bullish engulfing candle. So let's see if we can close again. Maybe we can catch maybe a buy coming into the market. Let's see, this candle is going to close in 3 minutes. Is anybody in any trades right now? It helps me. I like to know if anybody is in any trades right now. NASDAQ buy. Alexander, nothing, not in any trades, no? You guys, okay, I see some of you guys are index buying. And remember, these are like little appetizer trades right now. These are like appetizers. The dinner will come with NFP and Wall Street cash open. So I know a lot of traders want to trade right now, but just keep in mind that we're going to get a ton of volatility at 8:30. So if you're taking some positions right now, it's good, but remember the big moves will be coming at 8:30. And another heads up, if you're in a trade leading into 8:30, the market could turn on you. Hopefully it doesn't, or go in your favor and it's a good trade. But I never ever trade going into major red folders. That's just a rule I have. Because I've been burned so many times in the past where the setup looked perfect. For example, like a double bottom. I was buying the double bottom at demand, and right as soon as news triggered, boom, it just dumped. You don't even have time to react. 1 second, it was a 100, 200 pip red candle and triggering stop losses. So I had at that time hard stops in the market, and it was also bypassing my hard stop with slippage. And then that's when I said, this is crazy. So I'm not going to just guess or gamble which direction it's going to go. I'm going to wait for confirmation. I'm going to wait for some volume to close and give me more information. So unless you're doing something very, very small, like a little test trade, something penny size, you're testing the waters, that's something you can do. But even hard stops, sometimes with that type of momentum, depending on what type of broker you have, it might not even execute a hard stop. Or slippage and spreads, okay? So these are all things we have to factor when we're trading news. So make sure you look at your spreads. I can't believe how many traders don't look at their spreads when they're trading news, okay? Because your spread is everything. it will set you that much back in the trade. So if you have, like when you're trading gold, if you see you got a 5 pip spread, if it's changing when you normally are like at 1.5 or 2 pips, you got to understand when you take that trade, you are behind 5 pips behind. So you gotta really pay attention to these things. No, I'm not in any trades right now. I just finished the analysis and I'm just waiting myself. Okay, so what we could do is, where I originally had the sell down there, now you see we're above this area. So what I could do is start to bring my sell right over here, below this area. Okay, so I'm just using this demand area for reference. Same with over here for NASDAQ, maybe a potential sell below here. Let's see now 50% of this red candle for NASDAQ is right here. Let's see how it reacts at 50% here. Is it going to pull back up here and then come right back down and maybe get a double bottom? Or is it going to close above this candle? So right now we're still inside here. US 30 is making a move, coming right back up to that daily. Let's see if it can close above this yellow line or if it's going to retrace right back down. Let's see gold and oil. Okay, so gold and oil still in here. I'm going to place an alert. Let me put an alert on my chart just in case we're off the charts. And we'll place some alerts for oil. Rafi, you're a noob. What would you consider a feeler lot for a $1,000 account? Pennies. 0.01, 0.1, whatever is like penny size for you with your broker. 10 cents. Something insignificant, something just where you're learning how, you're getting a good understanding of how the market is moving without really losing anything significant that will hurt your account. It's not, you're not looking to make a lot of money with the feeler. It's more you're getting a good indication of how the momentum is moving. That's my opinion, okay? I started using tester trades too, and that started to really help me as a trader. So I never used to do that. Everything that I was trading was always like a standard lot size, every single trade. And then you can imagine when you buy an impulse candle and then it reverses on you like 25 pips, and then before you know it, you're down $250. When now, if I'm going in on an impulse and I'm not too sure, I don't have confirmation, go in with a small little trade, 10 cents. If it goes back on you 20 pips, okay, you lose $2. $2 I can manage, but $250, that hurts you. Unless you have a massive account, guys, okay? So I'm just talking average trader here. If you have a $500,000, $1 million account, congratulations, great, that's amazing. But I'm trying to relate to the average traders here. There's a lot of traders who are trading with demo accounts. There's a lot of traders who are trading like how he said with under $1,000. Not everybody here has hundreds of thousands of dollars of real money trading in these markets. But this helps you too with a prop firm. So if you're trading with a prop firm, feeler tester trades help out. And if you feel confident, then you can step up with the bigger size. It's getting myself, like when I talk to the guys on Zoom, I'm an emotional trader. Like I need to be emotionally involved when I'm trading. So even a little tester trade, I see it gets me going. I know I'm in a live trade. I try and keep my mindset that I don't look at it as pennies. I look at it as pips or percent. I'm in the trade, I'm testing it out. If it goes my way, then I feel confident to increase my size with the move. But if it goes against me, if I make a mistake, I can close that out with a minimal loss, and it really doesn't affect my psychology for the day. I don't look at those as win-loss. So when I do my profit loss for the day, I only calculate my real results with my normal trading size. The little feeler trades, I don't even look at those. I don't even calculate those because they're very insignificant, if that makes sense, guys. The guys in Zoom too, when you guys are trading with those on your journal and your PL, don't be looking at those little feeler test trades. Don't use those in your, because it will skew your numbers. Just when you go in with your normal trading size, that's what you should be calculating. That's in my opinion, okay? And you know, I could be wrong, but I'm just saying for myself. Everything I talk about, guys, is how I personally trade. You know, I'm not saying I'm right, I'm not saying I'm wrong, but I'm very transparent and I'm very authentic with telling you exactly how I trade. And I know that it's helped a lot of traders in the past. Okay, so we are pushing right back up. So we're forming now. Okay, so our first leg up, and then we got rejected. We form now our neckline. So we know where there's good neckline. We're coming right back up. Are we gonna come right back down? Let's see if we're right at that daily area too on US 30, the yellow line. Am I on 15-minute on gold? Gold, no, 5-minute. Oh, sorry, yes, my bad. Thanks for telling me that. Sorry, yeah, I guess I hit the 15-minute by accident. Thank you. Okay, so oil is still in this consolidated range. We're building a little bit with gold. Let's see if it can come up here. Maybe we can short it down a little bit, but we're 7:15, so it's a new 15-minute candle in the market. See how, yeah, the market, yeah, I was just going to say that. See how the market is kind of just ranging right now, slow move. It's like the calm before the storm that's coming. So if you're trading, like I said, you can make a little bit of pips, nice pips in here, but we have to be very, very cautious for what's coming. Okay, oh my God, look at 420 viewers. Amazing. I just looked at the viewer count and it was 420. Is that telling us something? Do we got to walk away and do we got to go smoke a joint? 420 viewers. Thank you, guys. That's a sign. That is a sign to smoke, have a smoke and eat some pancakes. Smoke and a pancake. Scotty, you're mid-J. Nice. Smoking. Oh, I will always pass it. Anytime you're smoking with me, I always pass it. There's lots to go around over here. If you guys are ever in London, Ontario, or close to Toronto, message Dave and I. We'll come visit you guys. We'll go out for lunch. Okay, so we're pushing down. Okay, so a few impulse breaks at this daily area. See why I identify 50% of that red candle? So we came right up there and got rejected. So we were coming up again and it got rejected. So that's why I like to identify 50% of bodies just by even eyeballing it, just by looking at a candle and looking at 50% of it. It can tell you a lot of information. Okay, so let's see if we can close above here. Parnesha, thanks for being so humble. Not many experienced traders are like this. It just, I think I'm not saying I'm a super experienced trader. It's just, I enjoy scalping. I've learned a lot from scalping a lot of candles for a lot of years. I don't know why most traders don't share their experience. Even when I was learning back in the day, 10, 15, 20 years ago, there was a lot of experienced traders and there was only very select few that were sharing their knowledge. And those are the ones I really gravitated to and I really respected. There was other really, really good traders, but they would never share what they were doing. It was just they were showing their profits every single day. And I'm like, it's great. I know you're making money, but can you help teach how you're doing it? And there was other traders who were doing really well, but they were just educating. And that's what I gravitated towards. And I really respected that for them. So that's what I said. If I was ever going to get involved in teaching how to trade, I wanted to share as much knowledge that I know in the markets with you guys as much as I can. Like when I lose sleep at night thinking, guys, about what webinar I can do. I come up with a million things and just anything that I can give back. Just thinking about what we can teach and things like that. So every single week we come up with something new. So and then it's fun too, because the members say, Ron, can you do this? I'm struggling with this. And then I'm like, yeah, we can do something, no problem. So you guys help out too, everybody in the Zoom. You know how many messages I get from you guys, and it's just saying, Ron, can you do this? Can you do this? Can you do this? And I like it. I like when you guys do that. It gives me good ideas too. Okay, guys, so we are making some bullish momentum now. Now we got US 30, okay, closing above the daily. Let's see if it can retest. NASDAQ still has not got above 50% of this move right there. So this is where I start to like draw the red box, just to give me a heads up that we might retrace right back down. Let's see, gold and oil. So gold and oil, okay, not doing much right now. I would recommend we wait for a just a little bit longer. Okay, it's coiling up. There is some trades to be made, but there's going to be an explosion at 8:30 a.m. Eastern. Do you guys want me to put moving averages on my charts as well? Do you guys want me to put like the 9 and 200? I know some of you guys are very comfortable with the 9 and 200s. If you guys want, I'll put them on all the charts. Because it does help you guys. I know some of you guys are like them. So on my charts, guys, the green line is the 9 EMA, okay? The 200 is the purple. So you can see US 30. See, if we never added the 200, we wouldn't know. So it came up to the 200 and got rejected. We're coming up again to the 200, okay? So 200 is purple. The green is the 9. I'll put it on all of our charts for us. Okay, so for NASDAQ, we are above the 9 EMA and the 200 is right here creeping around in this demand area. Okay, so you can see they're a little bit different. US 30, the 200 is up here. NASDAQ, the 200 is down here. Let's put it for gold and oil as well. The 9 EMA for gold is right here, and the 200 is at this current demand area around 1830. And oil, the 9 EMA, we're right inside right here, and our 200 is above us at the supply area. So you can see it's very tight, it's very consolidated right now. The market is coiling up. There will be a move, okay, but the market is waiting for, obviously, NFP. It's just like a lot of traders and investors are waiting for that news to come out. So what do you guys think for gold? With NFP, with unemployment numbers, do you think that gold is going to have a bullish breakout, or do you guys think gold is going to be bearish and retrace down? What is everyone's opinions on gold for the news releasing in the market with the unemployment numbers? Bearish, you think, Arhan? Up or down? Yeah, I agree with you. It's going to be up or down. That's a good one. You guys got bullish, 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 bullish. Wow, a lot of bullish, a lot of bulls in the Zoom. What do we got on YouTube? Bearish, Rav, bearish. Okay, so we got some bears, we got some bulls. Someone's gonna make money, someone's gonna lose money. That's the way how trading is, unfortunately. Look at the rejections, okay? Big. See, a trader the other day in our group, Warner, called this like a fork, where it came up with 3 wicks. And it looks like a fork. If there was 4 wicks, it would be a fork. So that's a good analogy. If you guys start to learn this, maybe you'll start to see this. This is a fork pattern that our member called it. So now I look at it and I'm like, okay, it looks like the fork. So it came up here 3 times to 50% of that red candle, rejected 3 times, and then you get a big red bar. So this is why I always identify 50% of the candle is for these exact reasons. Danny, I agree. Maybe we'll see. Yeah. But Powell already gave us heads up this week. He was saying that more Americans are applying for unemployment insurance that they didn't expect. They didn't expect so many to be applying for the unemployment insurance. So that kind of hinted a little bit, but that could just be talk. You know what I mean? We'll see what the actual numbers are when they come out. It just doesn't make sense. They say that the American economy, they're creating a lot of jobs. There's a lot of jobs that they keep saying. The job force is very, very strong. But then why do we have more people applying for unemployment insurance? It just, it just doesn't make sense. Yeah, Steve, Powell told Congress that he needs unemployment to be 10%. My goodness. That's not good. They're cooking the numbers, Shepo. It's, yeah, cooking the book. I know you're old school by saying that. Yeah, they're cooking the book, Shepo. I agree with you. We got to be careful with what we say, but could be cooking the book. Cooking the balance sheet, yep. All I need to do is just cook pancakes. They can be cooking the books. I just need to cook and bake some pancakes. Sammy, what do I think about ICT? No idea. Like, I don't, if you learn it, could be very good, just like smart money concepts. If you learn it, could be good. There's so many different schools now coming out. But if you're going to study all these things, make sure you guys study them in and out. Sammy, I'm more of a price action trader. I'm more of, like, you know how I trade, Sammy. I don't know too much about ICT and these things. If I was to really dive into it and study it, I'm sure I could learn it. But I'm just a straight price action trader. I don't know what it's called, what I do. I have no idea. Just price action trading. I never got into these ICT concepts. It's new stuff. Like, I don't even know how many years is it. When did they come out with this ICT stuff, institutional trading and all of this? Just different names of different things. Make sure if you're going to learn something new, yeah, like how you said, how it fits your personality. Okay, don't just do it because your neighbor is learning ICT. Do it because you're really interested in learning it. And if it helps benefit you as a trader, then that's good. If you're learning it just because you don't know what it really is, then I would just focus back to the basics. Basics of trading is price action. Keep it clean, keep it simple as much as you can. But if ICT helps you, go for it. If like smart money concepts help you, go for it. Order flow, depth of analysis, if it helps you, learn it. Anything to give you an advantage in trading. Gold is coming right back up. Okay, so gold is coming into the supply. So we've came multiple times up here. We came in London, rejected. We came in around 4:30, rejected. We came in again here 6:30 when we started the call, rejected. But when we look at the bottom, it is creating a higher low, and a higher low. So it is still building. But we need to see the official breakout above here. Oil is coming back down. Okay, so oil, you can see its lower highs. Pushed down from here, came back up, lower high. Now we could be actually breaking this big demand area. Okay, so for NASDAQ, if we can come back and now close above this 50% above here, then we could look for some buys above here. And then come back up to that hourly white line. What do you guys think of ICT? I'll ask you guys. What do you guys think? Anybody in Zoom? Are you guys learning ICT? Anyone on YouTube? Are you guys learning ICT? Just another way to do everything, yeah? Manuel, you don't even know what ICT is, to be honest. Yeah, yeah. I don't know if a lot of traders are. Dan, it's the same shit. Yeah, I don't even know too much about it. Liquidity grabs. Okay, if we're talking liquidity grabs, I know what liquidity grabs are, but if they've kind of changed the definition of what it is, that I might not be familiar with. But old school liquidity grabs, I know what those are. But sometimes traders, they come up with new names of things, and I'm not too familiar with the new names of whatever they're using. But if we're talking about liquidity grabs, you know what we have? We have the FU candle. That's what we coined. We got the FU candle. If you know what the FU candle is, then we can teach you what ICT is. Does the ICT have the FU candle? That's SST's coined ICT. The fuck you candle. If you guys are unfamiliar with what FU means. That's the liquidity grab candle. That's where the market maker gives you the good, bends you over and takes your liquidity and moves the market away from you. That's what we coin the FU candle. So with no Vaseline, Denny, yes. I don't know if that's an ICT. The no Vaseline FU candle. Guys, it's all the same thing, okay? It's all the same thing with different names. Same shit, different name. Who cares what the names are? Just understand what's going on. That's the main thing, okay? That's what I always tell the traders. Who cares what the name is? Understand what's going on. Make sure you understand what a liquidity grab is, okay? The name can be anything, okay? But make sure you know back end, why is the market doing that? Why is it coming down there to trigger all the pending orders? Why is it coming down there to take the stops out of the market? That's like an iceberg order and things like that. Why? Always question, why is this happening? Then you'll know what is going on in the market. Okay, so we're pushing down. What we can look for is maybe like a close below here. If we push and we close below this area for US 30, like if we get rejected, we could possibly look for a quick little sell to come maybe down to here. So I'm watching now. We got green candle, red candle, green candle, red candle. We're barcoding at this daily area. The time is 7:30, so we have a new 30-minute candle opening in the market right now. So what we're going to do is we'll watch NASDAQ down here, and we'll watch US 30 right here. Someone asked me, Ron, what is like your style, your strategy called? My style, my strategy is whatever I can do to make pips is my style, my strategy. I don't know if it has a name, but I'll call it making pancakes theory. The pancake recipe. That'll be the new style, I'll call it. Pancake strategy. Pip and dips, yes, Shepo, but making pancakes. Oh, okay, so fair value gap, that's SST. Okay, I'm familiar with the fair value gap, but it's just, we've called it a different name back in the day, but okay, fair value gap, yeah. The imbalance in the market, no, yeah. So it's just different names, guys. Where's the music, Sherry? We got flagged again from YouTube. Unfortunately, guys, when I play that music, we keep getting flagged, and a couple more strikes, and they're threatening to remove the channel. So Dave told me take that music off. I'm sorry, guys. I gotta find some other type of music, but okay. Now look at, we got an initial impulse break. Here we go, guys. Okay, so the market now is moving. So let's watch. We had the impulse move down. Let's see if the body can close, come back up. Okay, so NASDAQ is really moving. Now this is where we see if it will come back up to retest this red box now. Okay, it could be an ignited candle that's continuing to push down. US 30 as well. Okay, so it's breaking right here. Let's see if it comes right back up green. This is what's called like the death cross, where you got the 9 crossing the 200 up here. Okay, so I'm going to go into sell on US 30 right now. I'm just going to enter in on a quick little sell. I'm going to place my stop loss like above. I can go above this wick, but I'm going to place my stop at this red line. Above the 200 EMA, above here, I'm placing my stop. Okay, so I'm going to go in a sell right now. Well, I am in a sell right here. And then I'll place my stop like just above there. Okay, and I'm looking for it to try and come back down into this demand zone. And we'll see if I can grab a few pips in there. But I'm currently just in a sell right now here to see if it will push all the way back down into here. Okay, so I took the sell right there. Okay, so I'm going to look, if it comes down there, it's roughly 25 pips, okay, into there just to fill that zone. Okay, so this body closed below the daily. We had a quick little retest, and as soon as it broke the wick there, I got into the sell. I'm in profit right now. Okay, there we go, come down, and first trade of the day, lock in 20 pips. If you're in this trade now, you can reduce your risk, bring your risk a little lower if you want. You can even go to a break even if you want. That's all up to you. If you want to take the entire trade out, take it, or go through those rules that I said. Take out 80%. Yeah, there, boom, take profit. 25 pips, zero drawdown. Easy pancakes right there. I didn't even do a feeler on this one. I went in with a standard lot size. I just liked how it was set up. And this is how I scalp the markets. Pancake strategy, okay? There's 2.5 stacks of pancakes with some syrup on top. That's the syrup, maple syrup Canadian strategy. Okay, and NASDAQ right there, coming all the way back down. Look at this thing, continue run right there. 40, whew, maybe I got out a little early, but easy money, okay? I'm telling you guys, the pancake strategy, never mind all those other ones. It's pretty easy, right? But just identify your zones. And then up here we had barcoding, green, red, 730. We had that impulse close below, short candle, boom, just come down. Now, if you're still in the trade, now managing your stop loss, go to a break even if you want. And now you have zero risk. You're up 40 pips. You have a little bit of a cushion. If you want to put a trailing stop loss halfway at 20 pips, but it could come right back up, you know, because we're coming back into that demand area. So, like I said, these are the appetizers for the big meal coming soon. Okay, did anybody take that trade with me? Did you guys get in? Yeah, good job. Yeah. How many pips did you guys get out of it? Did you guys get the maximum 40? Scotty, I think we got the same. We secured 20, 22, 30. Nice job, Chung. Ooh, nice. You got the full 40. Good job. Luke, you got 32. Congrats, bro. Congrats. Omar, 25. Congratulations, Habibi. Good job. Okay. So that's it. Just, you know, one quality trade. We waited for it. It was, do you guys know why I went in on that one? Like, look at the M pattern. Okay. So I took that leg, the second leg coming down, where it came up, back down, we created our neckline, and then the second leg coming down. So we filled that imbalance. And then we came right down to that demand zone to the prior neckline. So if you don't take out your 40 pips, this is what can happen. Now there's bids down in here. So they bid it right back up. So like here NASDAQ. NASDAQ 2 dropped all the way down in there, but it's coming to a prior area of demand and the trend line. So if you do not take out anything out of the market, this is unfortunately what happens. There could be pullbacks, okay? But you got to either make a decision. When it comes down there, you take out your 30, 40 pips. Again, we went over this. Close your entire trade, be happy with it, or scale out 60, 70, 80%, leave the rest with that break-even runner. Maybe it just comes up a little bit, closes, and then we continue a red candle going back down. But this is scalping the markets, guys, okay? I'm not looking to take this trade and hold it all day today. Just quick couple minutes, get in, get 20, 30, 40 pips, and get out. A couple of these trades a day, you can hit 50 pips a day, you can hit 100, and then whatever you want to do with those pips for lot sizing, that's your business. Ooh, Marcia, I like that. You pipped and dipped stacked on NASDAQ and dirty 80 pips combined. Congrats. Yeah, that's why I like trading indices together sometimes, because they move in tandem for the most part, NASDAQ and US 30. Yes, they have different correlations. They're represented by different securities, different equities, but they tend to move in the same fashion. Same with when we're doing DAX in the London session. It tends to move similar. Danny, can I teach you the Habibi strategy? Okay, now we're talking. Anybody want to learn the Habibi strategy? This is like SST's strategy, the Habibi strategy. We can teach this. I've been teaching a lot of Habibis over my years. If anyone wants to learn the Habibi strategy, we can teach this. Habibi, come to London. Yes. Habibi, Habibi, come to Dubai. The Habibi strategy, it's strictly trading oil. Okay, we gotta get some insider information on oil for the Habibi strategy over here. Okay, so gold coming right back up to the supply. We're gonna see if gold can do something above here. If not, could possibly sell like oil or gold below here, 1835, but it's trending up. So I kind of don't want to sell this because it could just come down a little bit, catch a wick, and go right back up. Gold, I'm going to stay away until NFP. But you guys see, okay, so and it's for education too. That's why we're here. We're here for education. We have fun. We're going to live trade together. But education is what we're here for, you know. Education is knowledge. So over here, we took that trade, okay? So we came down to the bottom of the neckline right here. This is where the neckline got created right here. So naturally, the market rotated right back down and the bids were waiting there, okay? So the bids were over here, which printed this big bullish engulfing candle. So there was bids here. We collected those bids and then the volume came closed above this bullish area. We retested it and came right back up. And then you see where we came up to? If you guys use the 9 EMA or roughly 50% of the candle, the body, and now it's getting rejected. So again, we might consolidate in this range. Maybe they do reject it. That's why if you have still a break even, I entered right there. If I still had a break even, I would still be live right now, but then you give away a lot of your profit. So that's why sometimes scalping the markets in a range, you have to understand what the range is. You got to lower your expectations, okay? Because this is where the volume is trading, just inside here currently. So we're not going to get an explosive move right now. So if we're trading inside here, you got to know what the range is. This is now where NASDAQ came all the way down, came up. It came to retest the red box and getting pushed down now. So we might consolidate down here for a little bit. Buys will look above this previous area where it got rejected 3 times. So if it ever does come back up here later, we'll look for some buys and maybe we'll fill right back up to this hourly. Maybe with that momentum, we can break out further above here. Okay, same with now NASDAQ, or sorry, US 30. We could be looking for buys above here. Okay, because it made a little bit of a supply at the 200, like right there. So maybe I want to look for further continuation buys if the buyers continue to accumulate down here. Okay, now it comes right back up. So in and out, that's what pipping and dipping is. Rob, 2.4% for the day with quality trades, pip and dip. Congrats, bro. Guys, shout outs to Rob. He's doing unbelievable. He's from Australia and New Zealand out there, so different time zones. Like we're always opposite from each other, but man, this guy, he's doing great. Charting, everything. Rob, super proud of you, man. You just keep it up, keep it up. He works very, very hard at his job. Hopefully trading can get him not doing overtime at work. And then hopefully in the future, Rob, we can get you out of your job and enjoy trading daily. Super proud of you, man. Keep it up. And always helping everyone in the Discord channel with his charts and messaging everyone. It's awesome to have people like this in the group. Gold, yeah, we'll look at gold. So gold is coming up here. Like, I don't want to trade gold right now. Just personally, if you guys want to trade it, you're more than welcome. But we're coming right back. We've tried multiple attempts to break here, 1837, 1838 area. It could be an impulse break. Just be careful because it could break impulse and then come right back down. Oil is building a little bit off the bottom here, like a nice little double bottom. Okay, so I'm thinking maybe it might gold might sell down to here, but if it does break out, we'll watch it, okay? Because we're approaching 8 a.m. So we still have to be careful with gold, unless you're accumulating a little position. Is anyone like in a buy from down here, like at 1830s? Anyone still holding a buy? Anybody on YouTube or in our group? Is anyone in gold from like 1830 range? Nobody yet? You got buys from 1832, Dom? Nice, man. Yeah, so you're building nice little base. Yeah, so if you've been building a base, hopefully now we can break out of here for you guys. But let's see, because this will be the first break. We have not broke this area, okay? So we have to, if they redistribute the volume, it could be a nice break, but it could come up and then get rejected, okay? So this is what we're looking for. This could be a nice impulse candle building to break out of here, because it's been a long time accumulating that they might redistribute some volume up here. If we do break out, our next hourly resistance is about 1839, 1840 for the guys in buys. Oil is a beautiful double bottom, very, very sexy. Nice double bottom, okay? So get in the habit, guys, selling supply zones and buying identified demand zones. You have a higher probability of being more accurate as a trader as opposed to buying the highs in a supply or selling the lows in a demand. You have a better, higher probability. Backtest it. Like, don't listen to me. Just backtest it this weekend. Identify your supply, your demand areas on the higher time frames, and then watch the lower time frame liquidity. When it comes up here, here it got rejected. Here it came up to the supply, rejected. Here it came down to the demand, went back up. Here it came down to the demand, went back up. If I was to sell all of these down here, I would be in trouble. I would be in drawdown, even down here. It didn't break, goes back up. Didn't break, goes back up. If we were buying, we make money. So that's why you want to learn how to identify these areas. And then when you have like a depth of market platform too, to help you with reading live liquidity, you can start to see all of the pending offers and all the pending bids resting in the market. And when we have a build up, yesterday in our workshop, we had a really nice setup yesterday where we saw a lot of bids at the bottom that came and got filled, and then they disappeared after when the volume was coming down. And then that's when we had that market sell-off yesterday in the afternoon. So when you have a depth of market provider or platform, you can start to see things that candles cannot show you. Yeah, so oil, like you said, could be, now we're testing that hourly trend line. Remember we did our top down. So this white line coming down is our hourly trend line. We just tapped it, and then we're gonna see here. Here's our 200 EMA right above us. So we do have to be careful with oil too. Okay, and then now we're just right back into consolidating between the daily and this area. Okay, so you see, if you had a break even, we took the sell, I took the sell right here, and if I still had like a break even, this candle would have triggered my break even. So this is the woulda, shoulda, coulda. You know, when you came down in profit 20, 30, 40 pips, that's why. Rule 1, close the entire trade if you're happy. Rule number 2, close 50, 60, 70, 80%, leave the rest running. Rule number 3 is hold it with a break-even stop loss, but this can happen. You get triggered at a break-even. No win, no loss. You just got to look for another trade. I look at a break-even as a good trade, as a profitable trade. You didn't lose any of your own capital, so you still got to be positive about it, but you still got to understand we're scalping in a tight range. So getting 20, 30, 40 pips, that's a great trade in one candle. Ayub, Juma Mubarak. Guys, can we give Ayub a shout out in YouTube? He went through some difficulty. My heart is with you. Ayub, I message you, bro. I'll message you today again, right after in the evening. Ayub lost his wife, and he's got young children. So guys, if we can all give Ayub a shout out, he's an amazing person, and he's going to be a sniper coming back. Ayub, I'm going to call you, okay, this evening. I don't know what time it is for you, but I'll call you right after I do the workshop and I pick up the kids from school. Okay, so you see what can happen in the markets, guys? See now this identified supply area. See how we pushed down on NASDAQ and then it came right back in? So it came right back into the supply, hit the 200, hit the 9 EMA, and we kind of closed below again and it's pushing right back down, okay? So this happens in the markets always. These are what's called pullbacks. But if they're healthy pullbacks coming into supply and the offers are continuing to populate the market, then we can continue to push down. Yesterday, if you were trading the indices all day yesterday, you would see that it was bearish. All the pullbacks were coming into supply and continuing to push down. So that's when you can learn, when you can establish supply zones. You don't trade if you don't feel comfortable counter trading and then just going with the flow of the market. I know it's easier said than done when we say just continue moving with the market, but a lot of these pullbacks are like they entice us to get in, but some pullbacks are smaller. You got to understand it might be a 20, 30, 40 pip pullback. You definitely have to pip and dip out of the market if you're coming into a supply area, because there's no guarantee we're going to break there. It might just be coming up there and there could be a big aggressive seller who's absorbing all of that liquidity. Then eventually we'll continue to redistribute it down and make new lower lows. And then when it pulls back again, that market maker again is applying supply and creating more offers and lower highs in the market, okay? So you see, we came down into here. That's why I say, guys, don't trade with the woulda, shoulda, coulda, because if you didn't take any profit out down there in this demand area, now it's coming right back up. So this is why I trade like a robot. There's no woulda, shoulda, couldas, okay? Because if I didn't take out anything there, now I would have been like, oh, I should have taken out money there. This has happened to me a million times. If I can show you guys my journal from years ago, You guys will see. If I can find it, I scribble, so it's on paper, wherever it is in this house, I'll show you it. But this happened to me a million times. I was going up 20, 30, 40 pips. I was looking for the break, looking for 50, 60, coming down to here, maybe a 100 pip move, and then it was always coming back to my break even. And I started to get sick and tired of this. So that's when I started to change up my trading, and I don't look back. So, and then if I take down here 20, 30 pips or 40, and then it runs down there, I don't get affected by it. I honestly don't. So a lot of traders ask me, Ron, how do you, if you take out 20 pips and it runs 50, how do you deal with it? It's just because because like this, if I didn't take out anything there, how do I deal with this move now? So it's just, there's always can be a story for everything. So just when you're in profit, make a decision what you want to do and be happy with it, okay? And don't look back, the woulda, shoulda, couldas. If we all have those stories. Every single trader on here has the woulda, shoulda stories. Nobody wants to hear them. Nobody cares, you know? Some of us bought Bitcoin in the early 2009. You know, if I woulda, shoulda, coulda. If I held it till now, yeah, I would have been a billionaire. But it didn't happen, so what are you going to do? Okay, now let's take a look at what the market is doing. We're getting close to 8 a.m. and we're coming right back up to the 200 EMA, right back up to, we came up here and got rejected. Now we're coming up with more demand. We could possibly break out of here. If we do, our next like red line area is right here, 32,205. Okay, we see NASDAQ is approaching, coming right back up to here where it got rejected multiple times. So let's see what happens. Now these zones, okay, so I flipped this one green. We're inside it now. So it's maybe it might hold and build into 8 a.m. Does anybody have any plans this weekend? Anything going on? Anything you want to share with us? They've already, guys, if you like UFC, John Jones and Stipe Miocic, the Croatian, will be going at it July 8th in Vegas. I say we all go down to Vegas, July 8th. Who's down with us? Barbecuing. Tassos, nice, brother. What are we barbecuing? Ooh, Barney, you're off to Spain for a holiday. Congrats. Oh, enjoy that. That's beautiful. Devin, today's your birthday. Happy birthday, my man. Happy birthday to Devin, Gen X. Wow, Sonia, enjoy your cruise. I'm jealous. Brisket. Ooh, nice. Oscar, you're going to Honolulu for 10 days. Oh, man, look at you guys. You guys are making all the pips here. Michael, you have no life? Me too. Recap on trades. I'll probably be doing the same with you. Scotty, are you going to Turkey? I love Antalya and Bodrum. I always go there. Look at all of you guys going to Portugal, Tassie. Nice. Okay, so you guys see the rejection now? Okay, so we're coming back up to the supply, to the 200, and there's a rejection. It shouldn't be like a surprise that we're getting rejected up there. Michael, you're watching Netflix. Chris Rock, it was funny. I watched that the other day. That guy is crazy. He is nuts. He went right into Will Smith again. Okay, guys, so we are 1 minute away from 8 a.m. Okay, so we could look again below this area. We can look for NASDAQ above here. For US 30, we'll look above this area here. For a sell, possibly if we do break below there. Let's see what gold and oil are doing. Okay, so gold could be building for a possible impulse breakout up here on gold. Let me just open these up so everyone can see a little bit more clearly. Okay, and oil too. So oil came up to the hourly trend line and we got rejected. I'll just try and open up the charts for everybody to see a little bit clearly. Okay, so in 5 seconds, we're going to get 8 a.m., which is a new hourly candle, and we're 30 minutes away from NFP, okay? So let's see. Now, NASDAQ, again, closed below this area. We have an ignited bar. Let's change this zone to red to look to see if it will pull back into here. Okay, it's an ignited bar. Could be coming down to break. Might push down. New hourly candle, okay, but let's see if it will. Yeah, this is why I'm scared of always the first like couple minutes of a new hourly candle. See how they brought it down, and if we sold, we would have got caught, and then it comes back up. That's why I always assume that the next candle, give it a few seconds, give it a minute, it might save you a trade, and then now we see how it will react in this red box. US 30 is starting with a nice bullish candle. Let's see what gold did. Okay, so gold got rejected. Okay, so careful up here. And oil also got rejected. Okay, so let's just be patient, guys. Oh, Michael, you were there in Liverpool with Chris Rock and Dave Chappelle. Nice. I got tickets here in London to see Kevin Hart in April. I can't wait for that. Okay, so we got rejected now. So we came up green, now we got rejected. Okay, so I prefer myself personally just trading US 30 over NASDAQ. I don't know why. I don't know why. I just, Mrs. Jones is something about Mrs. Jones. London, Canada, Dilip. London, Ontario, Canada. No, not the UK. Okay, so we got rejected and pushing down. So this is the type of setups I like to sell. Unfortunately, I didn't get in on this one, but this is the type of setups I like where the volume closed below, it pushed down, but I like how it came up green, tested the 200 EMA or 50% of this candle, and then pushed down. So normally I do take the sell like right here at the break of the body, and then I place my stop loss above this identified supply area. And then if it comes down 10, 20, 30 pips, then I just start to lower my my stop loss. But unfortunately, I didn't take this trade. I didn't get in. I'm waiting, guys, for 8:30. You see how we're just coiling up here? There is some nice trades. You can make 10, 20 pips back and forth, up and down, but I'm gonna wait for the news myself. Gold, you see gold, okay? Supply areas, oil supply areas, okay? So we're ranging right now. It's just ranging up and down, okay? So this is what I was saying. It's you have a higher probability of selling a supply than buying. Look how many times if you bought here, you got caught. If you bought here, you got caught. If you bought here, you got caught. Bought here, you got caught. Bought here, you got caught. And bought here, you got caught. Okay, same with oil. If you bought up here, the highs in supply, you got caught. If you did up here, you got caught and take you down and draw down. So look at how now we're coming right back into the demand. So let's see if we can buy the demand and come right back up. But we're coming down with more momentum. Okay, you can see it's a lower high. This area was lower than this high. So could be more and more offers in the market and could be coming down with more momentum that they could actually break this low and come down. But if they do, we'll see what happens. The purple line is oil's low of the day, $74.80. and then could come into the demand and go right back up. See how we came down, caught a wick. This is not the best time to be trading, okay, because we're so close to NFP. So guys, thank you. 640 viewers on YouTube. I appreciate this. Thank you guys. If you get good value out of this channel, if you get good content, if you're learning, if you can hit that like button, it really does help us. Dave and I are really trying to help everybody out on YouTube for free daily. We're trying to get our channel up to 100,000 subscribers. Hopefully in the next couple of years we can achieve that. It would be an amazing achievement if we can do that. And help everybody around the world, you know. If you need help around the world, we're here to help you. That's what we want. We want to spread the knowledge around the world. We want to get to places that they don't have this, you know. So if you guys liking the videos, it helps the YouTube algorithm. It helps when you guys are commenting and things like that. And we respond to all of your comments. You know, if I know some of you guys on YouTube that are always responding on the webinar, on the tutorials, and it's not a robot responding to you guys. It's either myself or Dave. Okay, guys. So what do you guys want to look at when we start NFP? Because we'll be like flip-flopping charts. Do you guys want to stay like on the indices and flip to gold, or are you guys all gold for NFP? I don't do the NFPs with you guys. Dave does it. What does he normally have on? Gold? I'll flip-flop. We'll flip-flop. John, which is better to trade, FOMC, NFP, or core? I enjoy trading all of them, okay? So I enjoy volatility. I'm different from most traders. I welcome volatility. I love volatility because I'm a scalper. So even just small moves, you know, quick in and outs, it's nice to scalp. A lot of traders don't feel comfortable trading news, and I get that. But I enjoy everything. I love FOMC. I love NFP. I love PPI, CPI, everything. I just enjoy trading volatility. Like if you saw yesterday with the Japanese news in the market, like USD JPY, if you saw the moves on that thing last night when they released those red folders, there's some big pips that you can make on red folders. But you got to be careful. You got to understand what you're doing too. Okay, so you see what we just did here? We came all the way down, touching the trend line. So if you were in a sell, okay, so like right here, let's say, for example, you caught that retest, that candle that broke, you sold. And when it came down there, you're up about 15 pips, but you're getting very close to that hourly trend line. So you have to understand when we're ranging, it could just come down to the trend line and go right back up. So you do got to be, when you're trading inside a range, that's why I lower my expectations when I'm trading in a range. I don't look for those huge 50, 60, 70 pip moves. Just a simple 15, 20 pip move, depending what security you're trading, because that's how we're trading in the range. Look at this big rejection. Came up right up to the supply, right up to the 200, and they rejected it. So now the markets are starting to get a little bit more volatile because we're 20 minutes away from NFP. So I'm going to wait for NFP news. And then I'm going to continue to trade after. So we'll trade after NFP once they release the results. We're going to probably get a crazy move in the market up or down, and then maybe we can catch some retracements or some continuations. And then we also have cash open at 9:30 Wall Street. So we have a big day, and it's Friday. So I know you guys are probably sick of me saying this, but on Fridays, you guys probably know, most retail traders lose money on Fridays. I myself am one of that guys. I've been that guy for years. Where on Fridays, I used to have a good week, and on Friday, give everything away. Because it was Friday. I tried to make some big money before the weekend, and all I did was lose everything that I worked for all week. So now I've changed my psychology. Now I'm a little bit more cautious on Fridays. And Mondays. Mondays are also another tough day to trade in the markets. Tuesday, Wednesday, Thursdays, in my opinion, are the best days to trade, the best volume in the market. So if you guys are going to gamble with NFP, I would highly recommend that you don't do that, okay? There is a lot of traders that do buy stops above, sell stops below, and they hope one gets triggered and it goes. But I've seen it where a buy stop can get triggered above and your sell stop can get triggered at the same time, and slippage can ruin you, and before you know it, your account is done. So if that's the way how you play NFP, I know there's a lot of traders that do that. It's like playing bingo. You know, it's just, you got to be a little bit more calculated. Okay, so gold came back up here, got rejected. Again, the hourly trend line, where we're still respecting it. So it might come back up and build again. Oil, we dropped all the way back down to our daily low down in here. Let's see if oil can come right back up. How is DXY doing? Rob has moved bullish and bearish more in the last 10 minutes than it has in the last 2 hours. Yeah, so you can see that now the volatility is starting to pick up now, okay? Because there's anticipation of the move. Wow, Peter Jost, that's amazing. Your financial situation already changed just with the YouTube live. You guys are amazing. I made enough profit to keep the bank of my head from my bond for 1 more month. Much respect. Much respect to you, Peter. Thank you. Appreciate that, man. All the success, all the best to you. Just continue learning and earning. And then guys in the Zoom, today when I'm done at 10, around maybe 10:15, PK is going to take over post New York with you guys. And then I have a quick one-on-one after. And then when that's all done, I'll have some lunch and then we'll start the Freestyle Friday, guys, where we'll just do answering questions, Q&A. You guys can unmute your mics. We can have just a chilled session on a Friday afternoon. Any charting that you guys want, anything. You guys can throw charts. We can look at charts. If you guys are in trades, I can help break down trades with you guys. Whatever you guys want. It's your afternoon. I'm here just to help you guys with whatever you guys have. Anything. Freestyle. You can ask any questions, where to place stop losses. We were talking about that last night in Discord, about stop losses. It's a different school of thought with stop losses if you're a scalper or if you're a swing trader. That's what's hard. Some traders are coming from a swing trading background and they have a different risk and reward management when they're swing trading. Scalping is a completely different school of thought. It's a different style. So you got to kind of switch your mindset. It's not easy. It's not when you're accustomed to swing trading for years and years and years, and then you want to learn scalping. It's a whole different. It's a different style, a different method, different risk reward ratio. Is US 30 a buy? Like for me, I'm gonna wait, but if it does kind of, if you're buying, you're counter trading this bearish move right now. So it could be a buy if it closes above here, and it could come right back up to here. But I'm gonna wait personally. I'm gonna wait until 8:30 because I don't want to get caught up in this, and then I'm nursing a trade into the news, and then it's a crazy move. So I took one trade so far, just that one trade for the 20 pips coming down. That's basically it. That's what I got. I'm waiting for the news. Like on a normal day, yes, I would be looking to trade all of this. But today we got to be a little bit cautious today, okay? Kiffin, Hong Kong 50. Yeah, if you want to trade the Hong Kong 50, we can do that. Bank Nifty too. I don't mind doing Bank Nifty. We might do that. Yeah, so if you're waiting, I see some of you guys are eating breakfast.
have a coffee, you know. There's going to be fireworks, okay? No doubt about that, guys. The market will explode very, very, very fast. So I'm going to mention one more time with risk and leverage, okay? Remember, we are retail traders. The institutions, the banks, the corporations have much more capital and much more liquidity than you and I. If we're on the wrong end of a move and we over leverage, you could give away all of your profits that you've been working for all week, all day, all month. You could potentially blow up your account. Why do we blow up accounts? Is for that specific reason. We don't have enough leverage. We over leverage our account, and the move moves away so fast from us in such a short amount of time. Our account is gone. So be very careful. Also, another thing, if you've had a good week, good month, if you can see the percentage of your account, how it's up. For example, if you're up 10%, let's say you're up 10% right now. You worked for the last 2 weeks, 3 weeks, 1 month. Your account is up 10%. Do we want to risk everything on NFP? No. Maybe just risk 1% on NFP. If you lose it, you're still up 9%. You can still live another day. You can still trade. You still have a smile on your face. You can still go into the weekend happy. But if we risk everything, that whole 10% on just an NFP, and we lose it, then you're going to have a shitty weekend. You're going to take that, you're going to carry over that mindset into next week. You're going to go through that negative emotions again. You're going to go through telling yourself, I was up 10%, I just blew it. You're going to be scared to trade next week. So just, this is what we need to overcome as retail traders. This is the hardest thing. That's what we need to overcome. You know, because we've all been there. I've been there just like you. I've been in that position, and I told myself I don't ever want to go back in that position ever again. So if you got to learn risk management, you better learn how to do this. If you want to continue trading into next week, another month, maybe another 3 months, maybe hopefully some of you guys can do this longer than 1 year, 2 years, 5 years, and be profitable every single day doing it. You got to start to set your mindset from now. You got to do it, okay? I know a lot of us are stubborn and we don't want to do it. We want to make a lot of money every single day, but it's not the way how retailers do it. It's very difficult. Trading is 99% is psychological. It's in how you handle your emotions and the financial swings. Like you make a lot of money one day and then you give it all back the next day. Then you lose more the next day, then you make it back. And then just those financial swings really, really affects you. King Amos, I'm not trying to preach or anything like that. I'm just trying to be honest and authentic with you guys. This is what I struggled with for years as a trader. I went through 3 years when I first started trading of financial losses, big losses, and I could never grasp how to trade. And then finally I just sat down, took 6 months off of the markets, and just came up with a plan of how I was going to do this the proper way. And when I took it serious after that with risk management, then it was a different game. Now it wasn't just about making money. It was about doing this long term. It was about doing it daily, in and out, hitting your daily goal and walking away. You know, some days as scalpers, you might hit your daily goal in 30 minutes. You might hit your daily goal in 1 hour as a scalper. But then that's it. You got to learn how to walk away from the markets. You know how hard that was for me? I used to scalp 24 hours a day, 24 hours a day. And then to make my daily goal now in 1 hour and to just walk away, you know how hard that was for me? That was one of the hardest things to do. So I had to find some hobbies. I had to learn how to do stuff in the daytime, or else I would just come back and trade. So set yourself up with a realistic daily goal that you can achieve every day. 10% per day is not a realistic daily goal. It might be you got a great day and you hit it, but a realistic daily goal, 0.5%, 1%. That's a realistic daily goal. And that can literally change your life, that 1% or 0.5%. We don't need to make 10% per day. Yeah, P. Witcher, levels for NASDAQ and Dow up here, okay? We came up to the supply, rejected. We came up again, rejected. So I will be looking for anything above here, okay, when news drops. We'll be looking above there. Right now we are breaking below here. So this is a target. I am looking to sell below here, but I'm not looking right now. I'll see if it comes back down during NFP and then we sell below here. Right now it's just, I'm going to let it continue to do its thing. Do you want me place like the consolidated box? Do you guys like that? Does it help you guys if I do like this to show you that this is the consolidation? Kind of we stay away from this zone. Do you guys like it better like that? Is it better visually like that? Yeah, that helps? Okay. Okay, so for NASDAQ, we're going to look for potential buys above here. We tried multiple times, but we have not broke above here. We came up again, got rejected. Now we're like in the below this supply area. So we could look for continued sells below here, okay? So what I do is, like, here's a demand, okay? So we came down there, couldn't really break. There was an impulse, came back up. So that is our current, like, demand in the market right there. That's still holding NASDAQ. So current consolidation right now for NASDAQ is inside here. So I'll place that white neutral box right in here for us. And then we'll look for possible sells below here, buys above here. Okay, so you see how we just broke, came back up, red, barcoding. We're 9 minutes away from the news. So let's be careful, okay? And then when we come up here, that's the daily, okay? We could, if we're coming up strong and the market is rallying, we could break our daily and just get right out of here. Or it could come up here, tap the daily up here, and then get rejected and come back down. Okay, so just giving us some areas where we're going to watch. Let's update gold and oil as well. Okay, so gold, we're going to be looking for buys above 1837. We have not cracked this all day. Okay, and then possible sells will be if we lose this area down here. But remember, it's going to be very volatile. It could be a big red candle that just spikes down, comes back up. It could be a green candle that just breaks right out of here and comes down. It's going to be very volatile. The first 1 minute, 2 minutes, you're going to see some crazy price action. It's going to be, I'm telling you, it's going to be very scary. So if you're trying to predict the move, like if you've got buy stops up here and you think it's going to come back up and break, you could. But just be careful, because if you have a buy stop, it could just trigger you really fast and then go right back down. So you've got to be careful. I use market executions. I execute my own trades. Maybe I wait for the first 5 minutes and then see the next candle. You know, every situation is different. So we got to just take it candle by candle. If you guys are already in trades, just be careful, okay? Telling you, if it's your first NFP, what I would recommend is you put your seatbelt on and you trade with a demo account or you trade with penny sizes. That's my recommendation for everybody if you're new to trading and you're learning, okay? For the experienced traders out there, you guys know what NFP is. I don't need to explain it to you guys. I'm talking to the new traders. This is like not too many traders will even trade NFP. They'll wait 1 hour, 2 hours after, the day after NFP. How much leverage do you guys use? If you're a beginner crypt, I would recommend the lowest leverage possible. The more confident you are, the more experience you have, then you can start to increase your leverage. But to go from 30 to 1 to 500 to 1 is like night and day, okay? So we went over this. We did, if you guys join our boot camp, we go over all of this about leverage. You want to start off with the modest leverage, the lowest possible. Some brokers are 30 or 50 to 1. If you're a beginner, that's where you stay. You stay in your own lane. And then as you get more comfortable with how leverage works, don't go to 500 to 1. Maybe increase it to 100 to 1. Get the feel of 100 to 1 leverage. If you feel confident there, then you can go to your next milestone, go up to 200 to 1. But jumping from 50 to 500 to 1, it's a lot of leverage. You make one mistake, you could say goodbye to your account. Okay, so it's 6 more minutes, guys. Okay, so let's have some fun. Okay, trade careful, everybody. Please manage your own accounts. Okay, be responsible. Okay, I don't need to be your dad here or your uncle, or I am Uncle Ronnie. Okay, but I do appreciate you guys like family. But we have to manage our own accounts. Okay, be responsible. Because there's going to be traders today that make money. There's going to be traders that lose money. There's going to be traders that blow up their accounts. It happens every single day in the markets. Unfortunately, we are all trading the global financial markets, and it is ruthless. These markets are ruthless. If you guys haven't learned that yet, the banks, corporations, institutions do not give a shit about you and I. If we lose everything today, you don't get a phone call saying, we're sorry, sorry about everything. Nothing. You lose your money, you got to deal with it. You got to deal with it alone, by yourself. So be very careful. And now let's look at like the overall pattern, what we got. Okay, so we've been, since the bottom, we've been making higher highs, higher lows, higher highs, higher lows, higher highs, a new higher low. We have our 200 above us. Maybe they do retrace it back down a little bit, pick up the liquidity, and then we're coming out if there's going to be a stock market rally. We had the big dump from yesterday, so there is a lot of recovery space above us that they could retrace it up to. That's if we see like a decrease in the US dollar. Maybe we see a stock market rally. Maybe we see also gold come break above 1838. We're continuing to the 1840s, mid 1840s, possibly 1850. But if we lose this 1830 support, then 1827, then 1823. Those are the targets down there. Okay, and oil, you got your levels right here. If we break below here, it's a new low. We could come up and test the hourly trend line and break right out here above $75. Okay, so please, guys, again, we're 3 minutes away. Put your seatbelts on, have some fun. If you don't feel confident trading, then let's just speculate. Let's see what happens. Okay, remember, we also have Wall Street in another hour, so we don't have to go crazy right now. So even if you don't trade the first 5, 10, 15 minutes, don't worry about it. There will be other volume to trade. You don't got to go all in right now, okay? I take it candle by candle. I could even go to the 1 minutes, but I think it would be way too fast for a lot of you guys. So like 1 or 2 minutes, you could catch a pop and a breakout, but I don't want to be responsible for that on this call. So I'm going to stick with the 5 minutes. Okay, so let's follow what they're doing. So the market right now, gold is coming down, okay, before NFP. You know, sometimes they bait us in, okay? I'm not gonna lie here. I'm gonna be straight with you guys. Sometimes they want us to look like it's gonna sell off. We all get excited. We start selling right before the news, and then they pop it up. So sometimes it's called a fake out before the news. You know, don't act like you don't know about this. Like the market is not gonna pretend to fake out retail traders. So it could be looking like it's going to sell off. We all hit the sell button. Then all of a sudden it's a boom, big green candle break out of here. Okay, so that happens. And look at your spreads too, guys. So everybody go on your MT4 and look at your spreads. Okay, you can see how they're fluctuating right now. See, my gold is 1.52, 2.5 right now. So you can see I was sitting at 1.2 right before all of this, and now it's jumping all over the place. My US 30 is at 150, which is 1.5 pips. My NASDAQ is 80, which is 0.8. So those are standard. My indices do not move. The only one that's really moving is gold and oil. Rob, I'm on my live account, so I'm not on MFF right now. Is it moving too, guys? Big spreads. What is gold on MFF currently? 56, 5.5? Wow. Okay, guys. So like my spread is on gold is 2. Okay, but it's moving. Like I even see it hitting 3. Okay, so it's really, really moving. Okay, so 30 seconds, guys. Okay, so we came down. Okay, so maybe those sellers got caught down there a little bit, speculating. Maybe it will come back down, but let's just watch, guys. So I'll stay on gold for the first couple minutes, then I'll flip over to the indices. Hopefully you guys are watching your own charts. Okay, so it's picking up the liquidity. We're right at that trend line. Okay, so we're still in the range. They are accumulating. 10 seconds, guys. Please trade responsibly. Okay, let's trade smart. 50 on Hanko is 5 pips. 50 ticks is 5 pips. Okay, so it's a bullish candle. Came right up to the supply, breaking out now. Just hang on, hang on, hang on, hang on. Okay, so it could just see how it came up, rejected. Okay, it's just the first 10 seconds, guys. Okay, indices are pumping. Okay, so gold is breaking out, guys. Okay, so gold is breaking out. Let's see the indices. Okay, look at it. Like they probably tapped everything above and below. Oh my goodness. Okay, it's going. Okay, it's a very volatile. Guys, don't get in. If you don't feel comfortable, don't get in. This is crazy. Okay, just take it easy. Take it easy. We can wait for this candle to close. This is the first 45 seconds. First 45 seconds. Okay, oil picked up a bottom too coming up. We got to also follow where this volume will close for retest. So what I do is, if I'm not in the trade, I'm just going through the motions. I'm flipping my box here, this one green, just going through the motions. If we do come back to retest this area, just fixing everything up. If we come back to retest here, maybe this will be demand. Wow, it's continuing to break out. Okay, so it's strong. If you guys are in buys, beautiful. It's a nice candle. Okay, remember, this is an hourly right up here. This is the next daily. This is the big supply area on NASDAQ coming up. So we're coming into, see what they did, how they faked the market down to the low, and they caught all those sellers, and then they pop it right back out. Okay, and gold too. Okay, how is everybody doing? Are we live? Is everybody okay? Because we're gonna wait for this body to close. Good. Okay, Sherry, you're all good. Pending order. Some of you guys hit 5%. Good. Okay. Hopefully no one got caught in anything crazy. Okay. And remember, if some of us haven't even taken a trade, it's all good. Don't worry. Don't just try and buy the high. You know, FOMO, you see it go up there and then you just want to buy up there, then you're caught. And these are not small moves. Like that wick to where we are now, that is 40 pips on gold, $4 move. Okay, so we are really moving. So these are why I give you guys these zones. We came up that big red box, rejected, the hourly rejected. Let's see now where they're going to close. Okay, this is going to be important. Look at how it's coming all the way back down. Okay, so look at the range. Okay, this is liquidity grab down to the low, liquidity to the high. So it's a lot of indecision. Let's see, 2 more minutes to close. And did you guys see how the spreads, how crazy they were? That's why sometimes if you look at your spreads, it's not even worthwhile trading this like right now. Look at, okay, so gold came all the way back up to 1841 and now we're coming all the way back down. So you can see the volatility. That's what I'm talking about. Oil is still in this range. Okay, I see some of you guys had issues with MFF. You couldn't close and profit. That happens, guys. It happens with A brokers. It happens with prop firms. So some firms don't even allow you to trade the news. So you got to be careful. You know. You guys couldn't close and profit. That's unbelievable. that sucks. Like that's not on us. That's like that's the prop firm. Like what you got to do is, like, I know we all complain with them. You take screenshots, you take video record, and then they're just gonna say that's how the market was moving. You know, that's their excuse always. Not just MFF, all prop firms. Okay, so here's the close. 30 seconds. We're right back. Let's see where we're gonna close. Maybe we get a pullback and maybe we can continue buying gold. So gold is right back near the high. So it came all the way back down, filled up with the bids. We're going to close in 20 seconds. Are we going to close above this hourly support line? And then maybe we're going to assume it's going to come down red. Maybe we can buy a pullback wick. Okay, my spreads are getting better on gold. I'm right back to 12 now, so 1.2. This is now favorable for me. Dollar is dropping. Yeah, so we could get continued. Okay, here's the red candle. Get ready. This is the new 5-minute candle. We assume it's going to come down red and reject. If it gets rejected and we break, we could come back up to fill the wick and maybe test the next hourly area. Okay, but let's see if it will come back down to retest the green box. So it's pulling back. Let's see how it can react in here. Okay, while that's happening, I'm going to look at the indices. So the indices as well, open red. Let's see how it reacts right here. Can it hold this area? If it doesn't, can we retrace back down to this area and catch maybe a retest? If not, if it's a red candle, it's going to come all the way back down. We'll see how far down. Remember, 50% of this green candle is like right around there. So got a nice little wick. Okay, let's see, and gold. Okay, so gold got a nice wick, but I don't want to just buy a heavy red candle with volume. Oil is about to possibly break out here. Okay, that's a nice rejection wick right there. Okay, so if gold, if we can pop up here, turn this into maybe a hammer candle, we could be getting ready to go. Indices, we got good bids building, but let's see if we can get back at least to the body and start to get stronger move. Okay, just patience. I haven't even taken a trade myself yet. Just patience, guys. I know I'm not in any trades. I haven't taken one trade. I've taken that one trade earlier, but nothing since NFP. There's nothing that looks like a quality setup. I'm waiting. If we have to wait the first 15 minutes, we got to wait. Okay, so it's retesting. This is just like if this was no news. We had an impulse candle that broke out, and now we're retesting. Okay, so if you guys need to use that analogy, pretend this wasn't even NFP. This is just a bullish candle that impulsively broke out at 8:30, and then now we're retesting. Okay, if you need to use that type of analogy, it's got a little bit more volume, it's a little bit more volatile, but it's just a simple impulse candle that broke out, and now we're retesting. So use that analogy if that helps you guys, okay? So we still got to be disciplined, just like if this was an impulse breakout candle. Same thing with US 30 or NASDAQ. We had a big impulse candle, and now we're kind of retesting. We see how they faked the low, took out the liquidity, and then they came right back up. Okay, so it's still building. We might have to wait 2 more minutes for this body to close. Still watching gold. Oil is starting to break out. Yeah, here goes oil. So oil too, this is an impulse break of oil. Wow, oil's a nice move. Whoo, there goes oil. Oh God. Oil's daily high is right here. So, oh, tap daily high. My goodness. Okay, gold too, guys. Okay, nice retest. Get ready for gold. This could be a buy here. Okay, let's wait too. Okay, 90 seconds. I'm looking for above here or the break of this wick. Also to see if it can close near this nice hourly. We're picking up a lot of bids down here. I'm ready to take gold, but I'm just waiting. Okay, I'm going to go in gold now. I'm buying gold now. Okay, so I just bought right here. Whoops, let me get rid of that. And my stop loss will be in this demand box down into here. So I'm risking about 50 pips on this trade on gold. So my stop will be like under here. So if it wants to come back and pull back, I'm going to give it room to breathe. My target will be, maybe I'm going to try for 1845 up here, the yellow line. Oh man, oil was a monster. I bought out resistance with a like right here, just a feeler, and then I'm gonna load another position if it comes right back up, if it can close above here. So this is kind of like my first tester trade. I'm giving it a bigger stop loss, 50 pips, because it's a smaller trade, and then if it can come back up, then I'm gonna go in with a standard size. Oil, oh my God, oil was amazing. Okay, so now it's coming back up. If we can kind of break above here, then I'm going to go in with another buy, a larger lot size. I'm just going to see if it will build, but I'm giving my original little feeler trade enough room to breathe, 50 pips to see what happens down here. And then now I'm going to get ready for my bigger trade. Yep. I'm going to buy now with a little bit bigger. Okay. So I've got 2 trades on gold in the market now, buys. Okay, so up to that white line is 20 pips. If we can get it up to that 50 pips to that yellow. Okay, so we just tapped the hourly, that's 20 pips. Let's see if we can break with some momentum out of here. Okay, we're sitting right at that hourly resistance. Can they pop it right here? Okay, so we're going, there we go a little bit. Okay, so that's about 25 pips. So my standard now is at break even. Okay, I'm up 25 pips on my standard and it's at break even. But I'm gonna try and look for that reward up there. But it's at break even now, so I have no risk in that trade. Okay, so we're coming up and I can secure whenever I want now, but I'm trying for that 30, 40 pipper, you know, I'm trying. There's 30 pips right there, but you know, I want to see also if it can close above the hourly and then maybe retest and then push up to here. But guys, if you're happy, okay, remember the buy was right here. My little feeler, I don't care about that. I'm in the standard size up to here. Okay, so what I'm going to do is I'm going to secure 80% up here. I have time now. I'm going to take out 80% and leave the rest 20% running. So I'm going to secure 80% up here, just full transparency, guys. My little feeler is insignificant. This one is the bigger size. And then if it continues to go, oh well, I'm going to secure 80% up here. Okay, but the target I would like is to hit that daily, that 1845. I don't want to fool around with NFP, guys, you know, so I'm happy with that. I still trade my style, even if it's NFP, I don't care. To get that 30, 35 pips and secure 80%, it's good enough. Because the next candle could come down red, okay? So Please, guys, manage your account. You guys either break even or do what I did, scale out a little bit, or hold it, okay, because it's moving. But that would be a nice TP. Shit, it's coming up there. That's about a 40 pip move, but I hope you guys can get. Oil is a pig right now. Oh my goodness, oil. Let's see what the indices are doing. Okay, indices just consolidating. Gold looks good here. Gold and oil, commodities, and precious metals. Chris, you're up 12%. Congratulations, brother. Eunice, 24 pips. Good job. Okay. Stop loss and profit. Good job. If you get your stops in profit, that's our part. That's our job as a retail trader, is to get our stops in profit or break even. We need to protect our capital. We do not want to lose any of our hard-earned money. That's rule number one in trading. Newt, you're up 40% today. My mind is blown right now. I can't even concentrate when I read that. 40%. Oh my goodness. That's bonkers. Okay, so here's the new candle. This is the new 15-minute candle in the market as well, guys. You guys know in the Zoom more than me. Be careful with these 15-minute candles because you know that they could come down. So please. But the first area we're going to try and respect is this white line. This is that hourly. Can they turn it into support? Let's see this pullback. If we can hold here and maybe, or a little higher, we could possibly move and tap that nice daily. And that's a full take profit. That's a 50 pip if you're still in the trade. If we build a higher low and we tap that white, yellow line, that's a daily area. And that's about 55, 50 pips. But I wouldn't get greedy up here, okay? Because this is a new 15-minute candle. It might come down, break this, and then come again where we bought in right over here. But now, nice hammer candle. So it created the new higher high. Hopefully now it can continue to grab some bids and get up here and tap that yellow daily. And then that's a solid take profit for everybody on this call, if it can get up there. Trung, too much pancakes today, 20%. Oh, congratulations. See, this makes me happy on a Friday. It really makes me happy to see that. But don't go below all of that percentage, okay? See now how we're coming right back down to this hourly. If it cannot hold, you know, you got to go through the 50% rule. If it doesn't hold right here of this candle, then unfortunately it's going to come all the way back down to here. So we're still holding that hourly. We're above 50% of this volume. Still we could build and maybe come up to that daily area. I see some guys 15%. Omar, 60%, bro. Are you serious? 60%. Guys, hit the likes, please. We almost have 900 viewers. Let's hit these likes. Come on. Let's look at the, okay, so with indices, we're continuing to build. Remember the purple line? That was our daily high. Now we're building a little bit of support here. We might be continuing to possibly push and break out of here. We created a new higher high at that hourly, but the indices are now maybe going to consolidate right here. Okay, so let's go through the motions as if there was no news in the market. We're continuing to do what we do, and then if it kind of closes below here, maybe we can look to short it back down to here if it doesn't hold, and we'll look for volume to close above here for a continued bullish momentum. Let's see gold. Okay, so gold is still holding the hourly. We might be consolidating right here. 2 more minutes to go. We still have not broke yet. So this is interesting. Gold is still holding the hourly. So I hope for you guys still holding that we can pop and we can tap 1846, the daily. And then maybe we'll get a nice new daily breakout on gold. Captain Boom, Webinar 21 has knocked my day out of the park. SmackDown. Which one was that one? Webinar 21. I can't remember. Entries. Oh, okay. Yeah, yeah, that was one of my favorites. That's one of my signature ones. Okay, I'm gonna put them the signature SST ones, the ones that I feel are very important to you guys. That one is very important. The all entries. Here we go, guys. So bullish hammer. We held the hourly. I hope this breaks right up to the daily for everybody here. I really do. I want to make everybody's day here. Why don't I show MetaTrader? Because I trade on my mobile. I'm sorry, I don't trade on desktop. I trade on my mobile, guys. I've traded on my phone for over 20 years. So I kind of stick to that routine. Okay, so we created that higher high. We're trying. You can see it's trying. So sometimes you might have to just accept that it's trying, but it's not getting up there. And then now we're coming back down. If it doesn't hold here, then the selling pressure will push down. So this is the point where kind of you got to accept, maybe take some profit out of the market because it's trying, but it's not really getting up there. So if we lose this, it could come all the way back down to here. So do got to be careful. Yeah, I use analysis on the desktop and I trade on my phone. Yeah, so I got my phone right in front of me. I'm hitting the trigger. I'm trading, and then when I'm away from the desktop, I scalp Newt in the car. I scalp in the grocery store. I scalp when I go pick up my kids from school. So I'm just scalping on my phone. So that's why I'm very used to scalping on my phone. Okay, guys, so we couldn't really break, okay? So it did come up to 1844.45. We're looking for that extra 10 pips, but that's where we don't need to get greedy. That's still a nice haul. Get your money and get out. Oil now, okay? So you can see we're getting rejected. If maybe we close kind of 50% below that bullish candle, maybe we can look to short oil to cool it down a little bit down below here. So like below here, if oil can come down and close below there, maybe we can look to sell oil, cool it off a little bit, but don't fight it. If it's not going to come and break below here, this is a nice, maybe a 3-bar play opening up on gold, still holding this hourly white line. Oh my goodness, it might actually get up there. So we are holding hourly support, the white line. Okay, this was from early when we started the call. I didn't just place this now. So you can see how it's holding. Look at, I hope it hits. Oh my goodness, this is going to be a beautiful tap for everybody if you're still holding gold. Agent Smith, you're still holding. I hope it hits here. Come on, just hit this yellow line and possibly if we break out of here, guys, look at where we could go. Let me just give you guys some quick little rate up here. We could be looking at 1849, 1850. Okay, so our next move, right here. 1849, and then the next 1850 psychological area, 100% we should have a red box up there if we can get up there. Oh my god, my trading view just froze, guys. Oh, come on, don't freeze here. Okay, it's trying. But you can see we're building some good support there. It's trying. It's got a new higher high. Okay, so the buyers are trying higher high. We're holding hourly support, which is good. I hope it can tap that yellow line. Then we tap that daily. Oil is still moving. It's highly overbought up here. But with news, we cannot stop it. Okay. So only shorts if we close below here, retest this, then we'll see oil drop. But other than that, it's continuing moving. Let's look at our indices consolidating. Okay, indices are consolidating at this supply and down to here. So we can continue to wait here and be patient with indices. And guys, we're approaching 9 a.m. as well. Oh my goodness, look at oil. The next daily area, $76.50, okay? We're approaching 9 a.m. in 6 minutes. So please be careful. We could have a new hourly candle and it's a very important hourly candle, okay? It's then we have Wall Street cash open in 30 minutes. So we're gonna get increased hourly volatility in the market coming up. But gold is still respecting our hourly support line at 1842 here, still holding. Is the other news important? Which other news, Sumit? Okay, so we're coming right back down. If it doesn't hold, then gold is going to lose this and could possibly sell down a little bit. Okay, so if we're looking to sell gold on like 9 a.m., if it comes down here, what we're going to look for is we're going to look for a break of this hourly support, a retest here, turn that into hourly resistance, and then maybe we can shoot back down into here. Okay, so that could be another setup for later on. But right now for buyers, I hope it can tap that daily for you up there. Okay, is everybody still doing okay? Are we still alive? I hope no one blew up any accounts, but that's what I was telling you. If you're on the wrong end of a trade with this, like if you were selling like quickly, if you sold down there with that big red candle, then it came back up, could have got caught. Okay, so that's why sometimes when in doubt, just wait it out. When in doubt, wait it out. If some of the best trades is not taking a trade at all. You don't lose any money if you don't trade. It's simple. Okay, so now you start to see we're barcoding green, red, green, red. So we're getting indecision right before the hourly candle. So we're possibly going to break. We're not going to hold this support level, but it might break, catch more bids down here and come right back up. But if we break and we close below here, then it might actually come trickling down at 9 a.m. So be careful, guys, please. Make sure you also have like a trailing stop loss, depending, I don't know where you guys all bought, but you got to really manage your trades now. Okay, and there's a lot of candles. Like everyone's asking me, Ron, can we trade this candle? Can we? I'm getting DM'd. I'm getting also some guys are text messaging me. My buddies that live in London, Ontario are like, Ron, do we buy right now? They're texting me. But no, we're not looking to buy or sell right now. It's barcoding. Okay, so we need to look for another proper setup. Oil. Okay, so oil. We'll watch to see at 9 a.m. close below here. Gold at 9 a.m. to close below here. We could be looking for something. But we're 3 minutes away. Yeah, the hourly candle, okay? So that's the focus, is in 2.5 minutes, we have a new hourly candle coming in the market. And just trading normally, without any news, you guys know that the hourly candle adds volatility in itself. So it normally kind of reverses moves, stop hunts early, and then will continue a move. Now we have an hourly candle right off of NFP, and also we're close to Wall Street cash open. So this 9 a.m. candle is a serious candle. So I hope everyone respects this hour, because this is a very serious candle today. This could dictate the move of the market for the entire day and actually how it's going to close going into next weekend. This is like, you know, the ICT, what we were talking about, the institutional candles, this is it. This 9 a.m., 10 a.m., these 2 hourly candles are the institutional candles coming in the market now. So we have to trade very, very disciplined now. Joel, are you messaging me? Is it you texting me right now? Okay, so this area, green, we're holding support. Okay, for oil, we're going to look to bust this area, retest it, then maybe drop. But if it doesn't, maybe it's still going to hold here, consolidate, accumulate, bull flag, and continue breaking out of here. So we have 90 seconds to go. We got like a little double top on indices. Okay, came up, down, it's breaking. Let's see if we can close below here too. Maybe US 30 might retrace down a little bit. Same with NASDAQ. Maybe it's going to continue to break above here. If it does, we could be continuing to push bullish, depending what the US dollar, if it's going to continue to sell off. Okay, so we'll watch over here. So we did break, but no volume closed below there, so that's good. They came down, they grabbed some bids. Let's see where we're closing. So you see it's barcoding, just red, green, red, green. Okay, we're in a flag, bullish flag right now. Okay, it's got a high probability that it will continue to the upside. That's a standard bullish flag pattern. We should all know that, but it's not always the case when there's news in the market. So 20 seconds to go, and then we're getting a new hourly candle. So we are pushing down here. If this closes below, we could look for a retest and sell gold down here. Same with oil. Okay, so here's the close. Okay, so oil right away got rejected. Give it a few seconds. Give it a few seconds. Let's see if it will turn right back up. Give gold a few seconds. It's pushing down. Let's see if it will come down and trigger the 9 EMA and catch a wick. I know it's a quick drop, but sometimes it'll just come down, pick up a wick, and go right back up. Okay, so we have to be very careful here too. This is the new hourly candle, so be patient. Okay, we can also look to see if this volume will close below here. Okay, so we tapped the 9 EMA. This is where I originally bought in, okay, on that feeler and then my other trade. So that if I had a break even, now my break even is triggered, but I got out up there. So now it's continuing to push down. Oil looks like it's going to sell back down to the purple or the 9 EMA. So let's see what type of reaction we get down here. Is it going to hold and come right back up? Okay, it's a nice drop, but it could pull right back up, and then you get caught holding and drawdown. So we can also see if it's going to close down here. Can also be patient. I know it's exciting seeing a red candle. We all want to sell it, but sometimes we sell it and then hits the 9 EMA and then it starts coming right back up. Let's see what these indices are doing as well. Okay, so we close below. Give it a moment. Maybe we wait for the first 5-minute candle to close of this new hour to give us a little bit more direction. Okay, so it came down. We're going to watch, see it come right back up. Oil is so nice. Yeah, I agree with you, Frank. Oil is very, very trading very nice. Okay, so gold came down. Now look at it come right back up. So, you know, when you're pipping and dipping, that's that style. If you're trading that sell and it came down there, you're up 20, 25 pips. That's why I learned to pip and dip. I didn't take this, but if I did, it came down there. You got to consider what you're going to do down there because there could be bids waiting to buy it right back up. So this candle is going to close in 2.5 minutes. It's already half as exhausted. We saw it open, bearish, came down. Let's see where it's going to close. Is it going to close back below the supply? Is it going to come up and close above here? Maybe gold might start to make bullish move again. I'm just trying to be patient with you guys. You know, like I'm a very aggressive scalper for the guys that know me. And normally I would be all over this, but for NFP, it's a little bit different. You can get caught, and so just use a little caution. Oil, wow, okay, so oil, nice drop. Gold is picking up a wick. Let's see if gold can come back and close above the hourly line. Okay, remember, this is a new hourly candle that opened up. Okay, so did they come down strategically to take the pending orders, pick up some bids down here, hit the stops, and maybe it's going to come back and close above here, and then maybe we're going to get that momentum to break that daily high above here again. Oil, wow. Oil is trading very clean. Oh man, and the indices are breaking down. How long will NFP last? Until cash open, and then cash open we'll see the direction. See, that's why. That was a zone fill, pip and dip. That's why I kind of teach you that before we were getting into NFP. That was a big red candle that came back down to here, 50 pips. If you don't dip out of the market and grab your money, it could reverse really fast. So that's why I'm waiting to see, is it going to close strong? How is it going to close? That's why pipping and dipping You know, that's why I've been involved in a lot of trades like that where it was a red candle at 50 pips, and before I know it, I didn't take anything out, and it was a bullish candle come right back. Because then I started to learn what it's doing when it's coming down there. Now look at it. We got a hammer candle on gold, possibly going to close above here in the next 30 seconds. Maybe we retest this hourly, and all of a sudden we're breaking out bullish above here as well. Okay, so if you took that sell, you got to be quick. Otherwise, you're caught. So if you're patient, you wait for the first 5 minutes. Now we can see it's a hammer candle coming right back up here. So we're still barcoding green, red, but they picked up more liquidity, more volume down here. You know, they got more money. They tapped all the stop losses. They picked up all the bids down there. So let's see how we close. And if we can close and continue to move, then maybe we place our stop loss back below there and we're continuing to break out. So here's the retest. Let's see if we can retest. Assume it's going to open red. Let's see. I flipped this box, this zone back to green. Let's see if it can hold momentarily. Oil is continuing to push down. Gold. Now let's see if it can hold. Okay, so we are back in that flag pattern. It's holding now. Let's see. Tap here. Give it some momentum. Okay, we got a nice bullish candle forming, but let's see if we can get above the bodies. Number one, above the bodies, okay? Before we can tap anything, yeah, there it goes, okay? So see, above the bodies now. Okay, so it is building. And then remember, all we got to do is break that high wick, 1845, and this thing will have momentum to keep driving. So right up here, yeah, coming up there. Oops, I don't want that. Okay, so those sellers down there unfortunately got caught. Okay, now breaking. Let's see if it can break for a new high, and we're breaking out of here. Okay, I'm going to buy gold now. I'm buying. Okay, so I bought that wick right there. Okay, so I'm in a buy. I'll place my stop loss now below here. Okay, below the previous liquidity grab. I'll keep my stop loss down there. And then now I'm hoping that they picked up enough volume that they can continue to possibly break it out of here and break for that, shoot for that new daily yellow line, and then break it up to maybe 1848, 1849. Normally I'm trading indices. Got me guys trading gold. Tweezer tops currently, but hopefully we can use that volume to just break out of here. Okay, so we got rejected there. That 1845 rejected. Let's see if they're going to come back down to this demand pool, pick up some more bids. We still have 2 more minutes left on this candle. I'd like to see it close above this red line too. If we can close above these bodies, that will help populate the depth of market and get more bids in the market. If we can close above like here, 1843, if we can get this volume to close above here, then maybe we can get some more bids in the market so that we can get that volume to actually break out of here. So this is going to be an important close in the next 90 seconds on gold. Let's see what the indices are doing as well. Okay, so very erratic. Okay, coming back down, came back down red, picked up that liquidity. So we could be building for cash open. Like you got to understand too, in 20 minutes we have cash open, so it could be building. It could be building for that cash open breakout. What number is my stop? My stop is down here at the hourly. See the white line, the hourly? Like I'm below here. You know that last liquidity grab? I got my stop below here. And then at the hourly, next hourly support zone, that's where my stop is. Okay, so I'm going to give it some room to breathe. If it wants to pull back in here, I'm going to give it room to breathe to possibly get out of this daily area and break out of there. I've reduced my lot size a little bit, but I'm giving it more room to breathe. Today there's bigger zones, obviously, because there's more volume in the market because of NFP. Oil is dropping nicely. So if oil comes back down, this is where we'd look for it to come back down to, this zone right here. Okay, we're testing that tweezer top again. Let's see if we can break out of here now. Near the close of the candle, this is where we want to get that momentum. So look at where they closed it. Right there, strategically at the red line. So we want to see maybe a possible pullback, 50% of the candle right there. If we can hold, if we hold this 50% of this body, then we might come up and break that daily, okay? But if it breaks here, coming back to the bodies right here, 1844. So hopefully now we can break out of here. Oh, gold is teasing us. It's trying. Okay, so this is 50% retest of the body. See how it came and it just flicked? Okay, so that was a good retest initially right now. But what we got to do is we got to build off of this and start to potentially break out of here and break through this yellow line. 1846. That's the next daily resistance that we're going to try and break out of. Let's see the indices. Okay, so indices are pushing down. I'm going to sell US 30. Okay, I'm going to also get in a sell on US 30. So right here, yep. And I'm looking for it to come down and tap this daily. Yeah, already right away in profit on US 30. Okay, but I'm going to see if it can break the 200 down in here. Okay, so that's 20 pips already on US 30. But I'm looking for that daily right down there. If it can tap that yellow line, that's 50 pip move. Let's see if it can break down there. I'll have my stop, 50% of the red candle right there. Let's see if we can break down. Hopefully if it goes 25 pips, I'll go to a break even. But I'm going to hold this one, see if it will continue to break down. Gold, oh, okay, gold. We got a nice hammer candle. Let's go with this, come on. Yes, okay, break now. Okay, so number one, we broke a new higher high. That's important. In order to keep a trend going, we have to create higher highs in the market. So that's important. But right now, this is a critical daily area. Okay, so this is a nice hammer candle. That's what we want, a beautiful retest down there. Got that liquidity. Now we're looking to pop and break out of here. And then we could have a daily break. We have 2 more minutes to go too. We need volume to possibly break this daily so that we can populate the market with more bids and maybe catch bids here at this daily area. So it's nice that we're coming up here, but we got to break this. We got to really penetrate through. Even if it's an impulse, we need an impulse break. Okay, and that will help us in the buys. Let's go, come on. Okay, I'm still in my US 30 sell. I told you my stop loss is 50% of this candle. I'm still in this sell on US 30, and I'm in the buy on gold. There we go, there's the pop, okay? So that's the pop. Now, we've created a higher high. Now we need volume to close above the yellow line. There we go, guys. Okay, it's a nice little pop. Okay, so that's good for about 20 pips. If you want to go to a break even right now, you can. Okay, it's up to you. That's a 20 pip grab right now. If you want to go to a break even, that's up to you. But what we need is volume to close above here, maybe retest, and then we can shoot up again, okay? So we did impulse break, but normally when we impulse break, gets rejected, okay? That's what traps a lot of impulse traders, but we got rejected now. So now we got rejected hard up there. Yes, US 30, guys, okay? There's US 30, okay? That's a profit, guys. There's 60 pips. So I'm gonna scale out there. I was in a bigger size on US 30. Right there. I got out 60 pips. Okay. Did anybody take US 30 with me? Okay. I had my stop loss there, but now it's, oh, I got out. Okay. I'm happy with that. Let's go back to gold. Okay. So gold, unfortunately, we didn't get that close above there. Now what I can do to reduce my risk, if I don't like this trade, I did have my stop loss down there. I can now bring my stop loss up here because I just grabbed a good haul on that US 30. That maybe if I don't like this, I see the rejection now. If it comes down here, I'm going to close this gold. Okay. I originally had my stop loss down here. I'll take a loss on gold. I bought right there. I'll take a 20 to 25 pip stop loss on gold. But now I'm going to move my stop right up to here. Okay. So I'm still giving it room to breathe, but I'm not going to keep my stop below here anymore. Okay, so I'm still in this trade, I'm still holding, but my stop loss is going to be this demand area now. Okay, does that make sense, guys? I'm reducing my risk on gold. Okay, I'm still in it, I'm still in a buy, I'm in drawdown right now, but I'm putting my stop loss right here now. Okay, I don't want it to break and come all the way down here. I'm still in the gold buy. I want to see if it's picking up liquidity, but I've increased my stop loss to reduce my risk because of the US 30 trade. I grabbed 60 pips there, so yes, we're coming right back up, so let's see now, okay? But my stop loss originally was down here, now it's right here. Don't be tight like yesterday, MM. I know, but I just don't want this to get rejected at that daily, and then it comes down with big supply, and then break this, and then come down. So I'm strict with my rules, guys. I use my own mental stops, okay? So I'm a little bit different from other traders. I don't use hard stops in the market. I use mental stops. So this is me mentally adjusting my stop loss. But did you guys grab some pips on US 30? Sorry, I hate flip-flopping the charts, but that was a nice candle that broke down. Okay, so we're coming right back up. Let's see now. Hammer candle. Picked up some more higher low liquidity. That's nice, okay? We created the higher high impulse above the daily. We came back down. We picked up higher low bids. So technically we are still in an uptrend, but we got to get more volume closing above this yellow line. After that 30 when you closed everything. Nice, man. That's what it's all about. That's why I really love trading US 30. You can get 50 pips in a 5-minute candle really fast. With gold, I'm sweating over here. You guys can't see me, but I'm sweating over here with gold. I'm trying to be cool with you guys, but I'm losing my patience with this thing. Okay, we're back up, guys. We're back up, okay? So 2 more minutes to go. We got to go through the motion again. We got to get this volume closing above this daily. We can populate more bids, and that is 1848, a TP, and then our big psychological area, the supply area. No joke up there, 1850 is a psychological supply zone, okay? But I've tightened my stop loss now. I have my stop right here. Okay, guys, so, oh man, so it's still dropping US 30, retest of the supply zone and continue to push down. Okay, so yeah, US 30 could continue to break down. Yes, wow, 80 pips down to the next demand. If it breaks, we're going to see a big break on US 30. Anybody still holding the sell? I lived through you guys if you guys are still holding. Runner, Sean, good. Bilal, you're still holding it. Okay, God bless. Yalla, hopefully it breaks right here and we can drop a little further. But put a trailing stop loss, okay? For sure. Okay, it's breaking, guys. This is 90 pips on US 30, guys. Beautiful, beautiful. This could be like yesterday, another 100 pip move. Good. If you guys grab it, get these pips, guys, okay? Beautiful. Oh, okay. So we broke that supply. Excellent. Guys, good trading. I love it. You guys are doing really well today. Oh, gold, we're coming right back up. Sorry, guys, but I'm flip-flopping from charts to charts to charts. Okay, so here's the close. Can we close with some good volume above this daily yellow line? Let's see. Here's the close. Okay, get ready, guys. We're in profit, okay? But let's see if we can. It's a high probability we're going to come back down. Red, yes, okay? So test the yellow line. That's standard, okay? The market wants to test this daily area. If we can pick up a good wick here, pick up the bids quickly, then maybe we might have momentum to break these highs and then tap this red line. Okay, so that's a good rejection at the daily, but we got to build off of it. See, didn't build, came back down. Now it's like a double bottom in the candle in itself. Now it could be a triple bottom. If it holds, it's picking up some more bids 3 times. Is 3 times going to be the charm? If it doesn't hold, then we're going to test the bottom of this body. If it can't hold there, then we're going to test where we're making a little bit of demand down in the market right here. Okay, so we held now. It's good. Triple top, triple bottom in the candle itself. But let's see if we can move with that momentum and break this high where my cursor is. 1847.30. If we break there, we could trickle right up to 1849. Right up there. And then that would be a total of about 38 to 40 pip move. Okay, so it's still holding that daily. You see now how we turned the yellow line momentarily from resistance into support. It's only the first candle, okay? So I want to break this out and get out of this trade with profit before Wall Street. That's just me personally, because I don't like to be trading into Wall Street. Okay, so let's see if we can bust through that high. Right there, yep. Okay, so we're up there. Now, all we got to do is get that volume to break out. But it's teasing me. Like I'm up 20 pips, it's teasing me. If some of you guys are up 20 pips, 25, wherever you're at, if you want to go to a break even and manage your risk, you certainly can, okay? I'm not telling you what to do, but if you're up 20 pips and you got a cushion to protect your capital, to protect your personal account, you can go with a break even if you like, or scale out up here, your decision. Okay, it's kind of like like an equal high, okay, the tweezer tops. We came up there, got rejected. So maybe we got to consolidate a little bit in this area. You know, unfortunately there's going to be pullbacks, but that's what happens. Mike, today you made your previous job's monthly salary. Like, man, that is incredible, okay? To make your previous month's salary in a day of trading is unbelievable. Okay, so it can be done in trading. Like, you know, there is people that can do it. So congratulations to you, man. That's what trading is all about. Helping people, being part of it. I'm part of that. Like I enjoy that. I'm with you on that. So it makes me happy. You made my weekend by by saying that. So thank you guys. Guys, we're breaking out right now. Okay, here we go. Okay, there it goes. There it goes. Come on up. So I'm gonna close this trade, like, because I don't like to trade into Wall Street. Okay, I'm being honest and authentic with you guys. This is how I trade. I don't want to do something that I don't do, okay? So that's what I was waiting for, that pop. I'm happy with this, okay? It's 30 pips right now for me. I'm getting out. Hopefully I can close it and then I get slipped up in momentum, but I'm good. 35 pips closed, okay? Out. I'm at like 120 pips this session with 0 drawdown on all of them. So I had a really, really good session myself. So we were patient, we were disciplined. Guys, hopefully I walked you through that gold trade appropriately, you know, but I don't get greedy. It came right up there. Yes, it could move up to that supply zone, but I'm happy. I just don't like to be in trades in Wall Street because too much shit happens. So I'm good there, guys. If you guys want trailing stop loss, hold it. You guys manage your own accounts, please. Okay, I can't be responsible for anything after the fact. But this was a target that we got. I didn't just pull this out of my hat. Like, we went all the way down here last time. That's why I grabbed it where it was. And an 1850 is a psychological support level always. If you guys do trade, you guys should know that, the whole numbers. Okay, excellent, guys. Good session. I'm very, very happy. But we also have 5 minutes for Wall Street. Okay, so we gotta regroup. Okay, we gotta regroup. We gotta now ask yourself, are you in trades? Are you out of trades right now? Okay, so this is what you gotta ask yourself. Now, that US 30 was a really nice sell. I got out 60 pips. I was happy with that too, but if you guys milked it, congratulations. But now let's regroup, okay? So we're coming back down to the hourly trend line right here. That was that big liquidity grab when NFP opened. It came down there. So technically, they did come down here. The sellers had selling pressure to push it down here. So we still have to respect the sellers in the market. And then it came up to here. We found the supply at the hourly. It came up 1 time, 2 times, 3 times, rejected here, push down. That's why I felt comfortable taking that sell below that supply area. As soon as it closed, retested, sell. It got kind of, it came right back up, but it closed as a hanging man candle, and it needed 1 more retest and broke down. So going into Wall Street, guys, let me just clean up my charts. I know they're messy. Just give me a moment to clean everything up. How's everybody doing? Are we okay? You know, if you're a beginner, that's why I said demo account, okay? If you're a seasoned trader, just proper risk management. Don't do anything crazy. Okay, so what we could be looking for in Wall Street is maybe, can we get volume to come back above here? And then maybe we can push back up to there. Okay, right now we're in kind of this consolidated area. And yes, 930, you're absolutely correct, Vivian. That's where the real volume will come in. Okay, so hopefully some of you guys got a few pancakes. But now it's Wall Street. We have to respect Wall Street just like any other day. So that was NFP. That was the first hour. We had a pump, and then they brought it right back down. Okay, right back down to as if nothing, you know, where we were trading before when we were talking, when we were shooting the shit in here, we're right back down to like where it started. So NFP pumped and then dumped the market right back down to this consolidated area. Okay, so let's just bring it down a little bit more. And then see the daily, this line. So maybe if we get volume closing below there, that's maybe where we could look for a sell in Wall Street below there. We already penetrated down there with that big wick coming down. So there is trapped volume down here. There is trapped traders. Maybe the market will come back down. But what we're looking for is Wall Street to possibly break, but not just break, because it could break and catch a wick and go right back up. We're looking to break, retest this daily, 32,080, and get rejected, and maybe we'll push down and have like a sell-off today at Wall Street. Maybe that's not the case. Maybe they're going to stop here, bring it right back, and then if we close like above this area, we could look for continued momentum to the upside. Okay. So, and with NASDAQ, let's fix NASDAQ. Okay, we got 2 more minutes to go. Similar with NASDAQ, if we can get above this hourly level right here, maybe we'll continue to push up to that upper supply area. Let me just get rid of a lot of this. So we're right back in that consolidated area. The wick that broke down on NASDAQ down here, I like to be at a critical, like right there. If I take it, we're coming down to a daily. So what I do is this box, bring it right back down. And then we look for maybe a possible sell-off down there. But we're not going to take impulse candles. We're going to wait. If we got to wait the first 5 minutes, 10 minutes, just like we did NFP, we'll wait for it, okay? And another thing, now look at your profits, okay? If you're up a certain percent, if you're up 100 pips, whatever it is, do not piss your money and props and pancakes away for Wall Street, okay? Myself too. I'm up. a certain percentage, but now I'm lowering my risk in Wall Street. I don't want to give back everything we earned for, okay? We've been trading for what, 3.5, 4 hours now? Do we want to give back right now just because it's Wall Street? Some traders, if you're done for the day, walk away. Don't even trade cash open. Walk away. Go on with your day. Learn the discipline to walk away. You know, this is where we start over trading. We keep over trading. We keep trading more and more and more. I'm here for you guys for like education. But if I was done right now, I would have been long gone. I would have been making pancakes right now. But I'm going to continue to stay with you guys till 10, and then PK takes over our Monday, Wednesday, Fridays, our New York Post. So this is what you got to ask yourself, guys. If you're in good profit, let's go into the weekend, you know, with a smile on our face. Enjoy time with family and friends, and know that you made some bank today. Okay, gold is continuing higher highs, higher lows. We might tap. Yeah, 1850, we just tapped it. That's that psychological area, okay? So this is a nice move on gold, but you know, Wall Street could bring it all tumbling down. So here we go, guys. This is Wall Street open. Okay, so be very careful. This is volatility now. Okay, this could be a big head and shoulder pattern. Left shoulder, the head, we might trade inside this consolidated box, finish off this right shoulder, and then we might start selling off. Okay, so do you guys see the head and shoulder pattern that I see? Left shoulder, the head, we're back inside the right shoulder. Now they're pushing it down. But let's see if volume closes below here. We don't want to just come down, tap the trend line, and go right back up. We don't want to come down to the daily and go right back up. So let's be patient. Okay, same with NASDAQ. Head and shoulder. Left shoulder, the head that they grabbed the liquidity up there could be finishing off this move and starting to break down, selling below here. But we're not always going to just assume it, okay? It is coming down now nicely, but these could just be come down. If we were to sell, it might catch a wick and go right back up. So if we don't feel comfortable, let's just wait 5 minutes till this candle closes to give us more confirmation. What days do I specifically stream? I forgot, sorry, yesterday I was going to go over the calendar yesterday. I will promise you after this call, remind me. Right at the end, I'll go over our schedule and I'll show you how often we stream. We do a lot of streaming daily. Okay, so let's see a gold. Gold, okay? That's a take profit up there, guys. Okay, that's a psychological area. 1850, 1851. If you were in that trade, I would recommend maybe a little bit of scaling out and leave the rest running. But gold looks good, guys. Okay, if you're holding throughout the day, if we break out of here, 1855 is our next daily area. Okay, next yellow line. Remember when we did our top-down analysis? Oil, if you're trading oil, broke down right back to the demand. Remember what I told you guys earlier? Buy demand instead of selling it, and it's coming right back up. Oil and gold are trading very, very nice for NFP. I'm very surprised, guys. How many of you guys are surprised at how nice gold moved during NFP today? It was actually really nice. You guys got me trading gold. Normally, I'm always on indices. So this is why I tell you guys, be patient. You see that where it came down red right down to the daily, and now they're bringing it right back up. Look at now, okay? So that's why I tell you, if you go in a sell before a candle closes, you're up 10, 20, 30 pips, pip and dip out of the market. Don't get too greedy. This is Wall Street's first 5 minutes. They're maybe collecting liquidity. Elaine, you're loving it, but oil doesn't move this well during NFP. No, I know. That's why I was questioning myself. Should I do oil or GBP USD for NFP? But I liked how nice oil was moving yesterday, Elaine. So I said, why not? Let's do it again today. Oil is moving really. For a scalper, this is beautiful. Like, this is the type of volume we want to trade. Okay, so we have now 1 minute to go. So see how we have indecision inside the consolidated area. We came down red, we tapped that hourly trend line, we came right back up, we tapped that supply box, and now the volume is right in here. This is not ideal to trade. It's a spin top candle, a lot of indecision. So if we're trading this candle, you and I have no idea what's going on. That's what a spin top is. It's 50-50, it's a neutral. You got buyers buying, sellers selling, buyers buying, sellers selling. We need more confirmation. We need volume to close above or below a critical area. NASDAQ is coming down now. Okay, so let's see how it's going to close in 40 seconds. Chris, you like oil and made good profit. Congrats, bro. That's what it's all about, man. Find exactly your security that you guys enjoy and master it. Whether it's oil, gold, US 30, GBP USD, Bitcoin, whatever it is. Get familiar with the security that you like to trade. Learn its behavior. Like yesterday, I picked up on oil. It was trading really nice. That's why I thought maybe it's going to trade really good today. Let's do oil for the members. Okay, so we're coming back down bearish. Okay, so now let's get some confirmation. If we're closing below, assume the next candle is going to come up green for a retest, picking up bids, because anytime it comes down low, there's bids down there in the market. So yes, we assume it's going to come up green and retest here, or 50% of the body, the red line right there. If we break, then it's going to sell possibly down to this green box. But let's continue to look for a proper retest. Again, if you're trading, it's still early in Wall Street. This is the next 5-minute candle, but it could continue breakdown. So right there, if you want to sell, you could sell and come all the way down to the wick. NASDAQ is pushing down. I'm more of a US 30 trader, so I'm waiting for US 30 to break this level. Mike, NASDAQ 60 pips in 2 minutes. Congrats, my bro. Wow. Okay, so yeah, see how it's breaking down? So the retest, break there, and pop down. Okay, it could fill this wick and drop. Remember, we have trapped liquidity down here. Now the market is coming back to pick up this trapped liquidity and could continue to break down further. Gold flew. Oh, wow. So gold closed above that supply area, 18, and continuing up, 18. Wow. Congrats to you guys holding oil. I'm jealous. Like, I'm proud of you guys. That's an 86 pip move from the buy, and every pullback has been higher lows. If you guys are in that, congratulations. Nick, 70 pips on DAX, my man, good job. Okay, so this is that head and shoulder pattern that we were talking about, coming down now to the previous low, to this demand area. So now it's pulling right back up, but that's why sometimes pipping and dipping is the best strategy, in my opinion. It's the best recipe for pancakes. In my opinion, okay? Don't grill me on this and say, oh, this guy says this guy says that, this strategy says that. This is my strategy. So I personally pip and dip the markets. That's how I trade. So I know it's not for everybody, and I don't claim it's going to work for everybody. It's just, it works for me. And a lot of traders who I teach it to, they do really well with it as well. It's not for everybody. I don't claim it's the all-end, be-all trading style, but it teaches you get in, get out of the markets, get your money, and get out. We're retail traders. I'm not a banker. David, you got it. Flipping pancakes. With some fresh blueberries on them. Okay, so I'm looking at US 30, okay? So I was just breaking down NASDAQ for you guys. Everyone in the group knows I'm Mrs. Jones. I trade with Mrs. Jones. So nothing broke for me, so nothing to sell. So it's still consolidating. If we come back and we close above here, we could be looking to upside momentum. NASDAQ, okay, so came down to, you have to respect these lows, okay? So it came down there on NFP, and there was a big buyer that took the market up here. So when it comes down, you still have to respect this area, okay? Price action does not lie. It tells you. Now we're coming back down. So let's see if we can break a new low in the market. Remember, this is still the first 10 minutes of Wall Street Open, okay? Thank you, Dharm. I appreciate that. Thank you. All I ask for is a simple like for the work that SST puts into this. It helps. It helps the algorithm. Okay, it helps, and it also shows us when we look at it at the end of the day. I see the likes. I see the comments. it gives us more encouragement to come on here and do this with you guys. Because we can go and do this with the Zoom guys like we do normally, but we love to give back to you guys. You guys started everything for us. Yeah, like YouTube the first day we started, and we haven't stopped since then. So we always daily will be on YouTube. You know, maybe one day we'll switch up the sessions. Maybe Dave, give him a break. I'll come on here with London with you guys, and Dave will do more New York's Zoom, or we'll flip flop. But you know, it's just we're very flexible here. We can do all types of sessions. But we do really respect YouTube. It's we really want to get to 100,000 subscribers and help teach everybody a financial skill to help better your life. You know, that's what I believe in. Okay, so now we're breaking down. Let's see if volume can close. Now we're breaking the low. Okay, so NASDAQ is breaking the low. It filled the range. Okay, so it filled that void in here, the imbalance, that wick. Now I'm looking for a pullback and a sell now. Okay, so with US 30, now what I do with that green zone, I flip it red. Okay, assume it's going to come back and retest. We're below the hourly trend line now. Now we might get that daily break. Okay, right here. And then NFP low was right there for US 30. It's kind of lagging a little bit behind on NASDAQ, but they move in similar fashion. Gold is flying. Oh my God, guys, look at gold. Wow, silly me getting out too early. Guys, 130 pips on gold. Who can say that they got this whole move? Susan, you're still in it? My goodness. Are you serious? Wow. Guys, congratulations. See, you guys are better at trading than me. I'm serious. You guys have, man, you guys are like rocks. I love it. Okay, see, I scale out, but I live through you guys. So you know, when the woulda, shoulda, couldas, I live through you guys. So I'm proud of you guys. That is a 140 pip move. That is crazy. Okay, so we could be moving up to 1860. Congratulations, guys. Like, I can't even focus anymore. Oh my God, I wanted to sell US 30. I wanted to take the sell. I can't even focus anymore. Tanya, you didn't enter in gold because took some losses all day today. That's the thing. That's why I don't like trading before NFP. I like to trade with or after NFP. Do you guys understand why I wait? Because I don't like being in trades going into Wall Street. I don't like being trades going into NFP or any particular red folder for the matter. I like to trade with it or after. And yeah, because it could get frustrating trading before. You could see how gold was ranging and could really get you caught. But then after the news, look how beautiful it's trading right now. Like, honestly, I haven't seen an NFP this nice in a long, long time. Sean, good for you, bro. Proud of you, man. Killing it. Okay, guys, I think maybe we should take it easy on the trades. I think some of you guys have hit a really good percentage. Some of you guys have got some good pips. I can continue to trade with you guys, but I think this is good for a Friday. I think we should learn some discipline, guys, how to walk away from the markets, all of us. If you're going to continue to trade with, okay, again, this is part of the education. If you're up 1%, 2%, 50 pips, 100 pips, 200 pips, whatever you are up, maybe only trade with 0.25% left if you want to continue trading. So for example, if you made 1.5% today on your account or 150 pips, maybe just trade with 25 pips to continue practicing, but don't at least keep your money in your pocket, okay? Wow, now the markets are breaking down. Look at NASDAQ, look at US 30. Like, I want to continue to trade. I really wanted to take this impulse sell here, but I didn't. When you guys showed me gold, I was like, wow, okay. But if you're going to continue to trade today, this level, if gold cools off below here, this level, you could look for a potential sell below 1851. If oil today breaks this level, $75.35, you can look to sell below here. If oil continues to close above $76, we could look for continued buys on oil driving. Gold is a train right now. It's a bull train. Do not short this, okay, right now. Because if you start shorting, like if you're an RSI trader, RSI I know is at 86. NFP does not give a shit about RSI. Okay, RSI, I've seen it go up to 90, 95, 100, and it was still moving up. Every single short position is getting squeezed. The only way you short this thing is if we close and break this structure. Then it will bleed. But for now, do not be that person that keeps selling this, okay? Just because you're watching RSI. Listen to what I'm saying, please. I'm trying to help you guys, because this is normally what gets everyone caught on a Friday, is they keep selling this, because they see how far it's going, and then they have this indicator RSI telling them to sell the market. This is bullshit, okay? Don't worry about that. Price action is the best. What we need to see is now a break of 1855 daily. So we might see a break, it might come back up, then we create like a double top, then we break again, we retest it, then there's a good break of structure and a good sell. But just to sell a wick or just a 1 bar candle, you got to know that you're pipping and dipping real quick, because there's bids buying it up all day today. So you have to be careful, okay? That's the recommendation I'm giving for you guys on a Friday, because I know Fridays, the last few Fridays, if you've been watching the markets, like the stock market, we've had bullish Fridays continuing to break higher, and it's squeezing short sellers. The retail traders who think that it's going to sell off, and it keeps going big. Just keep bidding. Every time you sell, you're selling into bids, and it keeps going up, higher highs, and then before you know it, your account is blown because you keep adding sell positions because you think the market is overbought, and we always tell ourselves, oh, it's got to come back. But that's what they want us to do, okay? That's the psychological aspect of trading. Just continue to go with the flow of the market. Yesterday was a sell all day yesterday. Every time frame, daily, 4 hour, hourly, 30 minute, 50 minute, 5 minutes. If you watched Dow and NASDAQ yesterday, the indices, they kept dropping. RSI was down to 1510 on most time frames, and it kept dropping. Just don't be that person. If you are countering, small little feeler buys, testers, test out the market. If we lose $1, $2, $3, it's okay. We can recover from that. But if we lose 100, 200, 300, or some traders lose $3,000, it's difficult to recover, okay? So when in doubt, wait it out, or when in doubt, use a tester trade. Test out the market. Like if I'm starting to sell right now, maybe a small little feeler sell. Let's see if it will break structure. Let's see if it will pull back. Let's see if it forms a double top. Then with the confidence, I know that my little soldier, the little feeler, is doing its work. It's telling me information on the market. Then when I get the confirmation, then I can smack it with the big trade. And that's what helped me over the years and years to develop to become just not a huge profitable trader, but more consistent. That's what we need to do as traders, is learn consistency. The money will come after. The pips and the pancakes will come after, but now learn how to do consistency. See if you can do this 1 day, 2 days, maybe a full week, maybe 2 weeks. Maybe some of you guys have hit your first profitable, consistent month, and that's amazing. So let's try and do 2 months in a row. Do like a banker, maybe a quarter, and just keep at it. But if we get overly aggressive, we overtrade, we over leverage, everything we worked for, all that consistency can go down the drain, flush down the toilet in 1 day. So it's happened to me millions of times, and I promised myself I would never do that again. Look at the markets now breaking down. So what goes up can come down. That was that head and shoulder pattern. It's a textbook head and shoulder on NASDAQ, guys. Like if I was doing a tutorial, or if you look on Google, a head and shoulder pattern, that is a technical, perfect head and shoulder. It doesn't get any better than that. And now we came right back to the next daily. I don't even know, guys. I'm so flustered right now with how nice gold traded that I missed out on a few indice trades, but I don't even care right now. Okay, guys, so before I go, you guys were asking about the schedule. Let's go over this. So this is our schedule. We do a lot here, okay? A lot of live trading, a lot of live education. So this was this week. I normally do London, okay? It's me. We're starting around 2:30 a.m. Guys, in the Zoom, Sunday we have the daylight savings time. So I will message you guys on the weekend, on also when I do the Sunday forecast, about what time we start at. So maybe we'll continue starting at 2:30 a.m. Eastern, but it will be different for you guys in Europe and the UK, because you guys don't change your time, I think, in 1 week or 2 weeks after us. I don't know what it is, what exactly it is, but we'll continue with, what is it in? You guys are, we are an extra hour behind or in front. Okay, so you guys don't change till the 26th. Okay, but what we do is Monday to Friday. Today was because we're doing this session with you guys. But normally it's Monday to Friday, London. What we do is Dave does, okay, so here we're on YouTube and Zoom with everything that Dave does. And then post New York, what we do is all week. So 10:30 now when Dave wraps up, then we go into our post. Tuesdays and Thursdays, I do post. PK does Monday, Wednesday, Fridays. And then we do workshops and webinars. Tuesday, Thursdays in the mid-afternoon, 1:30 to 3 p.m. We do workshops. We do our weekly webinar. We do every single week here. This is today, our first session that we're going to do, the bonus freestyle session. I hope we have some fun, guys. I hope it's interactive. I hope everyone can talk, unmute your mics, talk, anything. We just shoot the shit. How was your trading today? What can we improve on? Did you have a bad day, good day? Do you need any charting? Anything, any questions about any trades you took today? If I can help you, I can help give feedback. You know, I do with the one-on-ones. This is kind of like a big one-on-one session for the whole group right here. I want to do this on Fridays, every other Friday or Friday. And then we have one Asian session that we do on Tuesday nights. But that's our full trading schedule. It gets really busy, you know. And then guys, we also have this promo going on. It's going to be done. We have Tuesday, Wednesday, Thursday, our intro to boot camp with a 3-month membership to see what we're all about. You get the signals, you get the Discord, you get the education, you get everything. There is a little bit of discount if you want to sign up. And I showed you guys yesterday, what our education is comprised of. We had our previous boot camp here. So there's a lot of 5-day boot camp we did, a lot of good information. Psychology of trading. I'm a big fan on psychology of trading. Types of traders. Are you a scalper? Are you an intraday trader? Are you a swing trader? Are you an investor? We got to talk about the different schools of thought. Stop losses. We were talking about this last night. Scalping has a different stop loss than a swing trader. So you got to understand this. If you're switching from being a swing trader to a scalper, you got to understand that there's differences here. And then smart money concepts. We have all talking about blocks, imbalances in the market, supply, demand, all of those things, technical indicators and strategies, and then backtesting Q&As and some like AAA setups that we recommend you learn. Then we go into day 2 type of traders, smart money, all of these things. And then we do our weekly webinars and then also courses. So that intro to Forex right now will take you into where we get more in depth with courses and quizzes. So you really learn the intro to Forex in here in more in depth, Forex fundamentals, then characteristics of candlesticks. This is what we are. We're price action traders. So this is what we recommend you learn. And you can learn the whole family of candlesticks. Then you put it together with support and resistance and those chart patterns, how we were just talking about that head and shoulder breaking down on NASDAQ. That's what you learn how to trade. And then we got webinars, workshops, and everything. Okay, so guys, I'm gonna end it here because I have a one-on-one very soon and then the workshop. So I need to get a little bit of breakfast. So I hope you guys had a fun week. Okay, Dave will be back on Monday. If he's not back, I'll message him on Monday. I will be back, but I'm sure Dave will be back. And I just hope everybody has an awesome weekend. Enjoy the time with your friends and family, guys. I've seen everyone is going on vacation too. Enjoy the vacation, be safe, and God bless everybody. If you can leave us a like, a comment, we do appreciate it. And I do read all those too. So in the chat too, guys, you guys in the Zoom, I read every single one of you guys. So if you guys have any questions, I go through it. If you guys have any suggestions for a webinar, put it in there, guys. Write it in there because I read everything. And it also gives me inspiration for new webinars. I have a few in my head, but sometimes you guys mention we should do this, and then we do it for you. We create it. Okay, guys? So thank you to everyone in Zoom. I'll see you guys in the afternoon. If you had a great day, just walk away. Maybe I don't see you guys. I'm not doing that so to be disrespectful, but maybe not seeing you guys is a good thing. Maybe I know you guys hit your daily goal and you guys are off your day and you guys are doing good things. So appreciate all of you guys, and you guys on YouTube. Thank you guys so much for all your support. We do appreciate and love you guys as well. Thank you for the likes, the comments, everything. I do really enjoy this. Dave loves this. So thank you guys. And have a good weekend, everybody. I will see you guys later. I'll send you guys out the Zoom 1:30. And James, I will see you in our one-on-one at 11 o'clock. Okay, guys? Have a good day, everyone. Thank you, guys. God bless.
Hey guys, good morning, welcome to another live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.